what you're seeing is a culmination of years and years and years of debt increases and printing presses of central bankers. China is increasing their gold reserves. What they report and what they actually probably have are two different numbers. These central bankers are getting more and more concerned about the US dollar. The equities and gold right now are still to be bought, and especially the equities. Grassroots exploration, I'm not touching at this point. There's just no money going in the ground. West Africa comes with its geopolitical risk, but timeline risk is much, much better. And costs to put in production is much, much lower. Gold's at all-time highs, and the market's not recognizing it. Everyone's still chasing US equities.
Gold is at an all-time high. Silver isn't, but it is performing very nicely, and it's actually outperforming gold on a year-on-year basis, year-to-date basis too, with the 5-year performance of both the metals being basically the same, not exactly, basically the same. They've about doubled over the last 5 years, whereas the GDX Gold Miners ETF is only up about 50% in that 5-year period. But interestingly enough, the miners are outperforming the metal on a year-on-year basis. So the current sentiment seems to be improving. Long-term sentiment still needs working on. So interesting setup to say the least, and much to talk about in this episode of Real Money Talks, where I'm joined by Cam Currie, whose face may not give that away, but he's already built up over 30 years of experience in the metals and mining industry, and is currently a senior investment advisor with Canaccord Genuity Wealth Management, and he's the leader of the Currie Metals and Mining Group. So Cam, I'm setting the bar pretty high as it is, so I hope you'll have some special insights here for me today, right after which I'll be going to West Africa to talk about termites, of all things, and specifically how Awalé Resources has used them to generate new targets for gold exploration rather cheaply. They also use termites to make one of their previous discoveries, which was very, very, very interesting. So we'll talk about all these things. And after that, I'll be headed halfway across the world, basically, to Nevada to look for high-grade gold with Western exploration. As always, though, timestamps on your screen, in the description, and on the time bar. So please use them to navigate the video. Give me all your feedback, all the pushback, whatever you think. Please let me know so we can improve this program. And Cam, I'm rushing to speak to you, though, as last time we spoke, which I guess was almost a year ago now. I'll have to look at the exact date. But at the time, you called a gold and silver bull market and specifically told me that it might be time for the equities to start catching up. And you turned out to be right. Again, year to date, year on year, the equities are outperforming the metals. But that's in the past. Let's look into the future, or at least try so. My crystal ball might be broken, though. What's your call? Your crystal ball working? What's happening over the next 12 months? Are we about to strike gold again, or should I keep my helmet on?
Well, I think it's important. The gold move has been the gold move. The equity move hasn't really mirrored the gold move. As I've said for the last 3 years, that the gold market is not a Western story market. It's a market for the autocracies and BRICS nations. And what we're seeing is a movement, or not a de-dollarization, but a new gold standard being created by the BRICS nations and the autocracies of the Western world. And so we've seen this perpetual accumulation of gold in those arenas in lieu of US dollars. And yet the gold equity story in North America is largely unknown. Again, when I talk to a lot of my corporate clients, the funds are not coming in. We don't have new funds going into the gold equity markets. The market still is very transfixed on the NVIDIAs and the Teslas, the Microsofts and that. And they aren't paying attention to the gold price move because it's not a Western story.
That is a point that I made on Twitter too a couple of weeks ago. But gold has outperformed all three of the main U.S. indices over the last 25 years, really, and by a significant margin too. Even if you count dividends on some of these indices, it's still done better. How long do you think this bull market is going to be, though? I mean, it seems like a stealth bull market, and I don't mind it because that might mean we're just at the beginning of it. But how long do you think it's going to continue for?
Well, I guess one of the things people have to understand is that price action creates narrative, and narrative creates ETF flows. So as you just said, we have gold at all-time highs. I mean, what other commodity currency is trading at all-time highs in the world right now? There's nothing that mirrors what gold performance has been. That's the price action. Just recently, we've had the narrative. In the last 2-3 weeks, we're hearing from a number of mediums and financial people in the United States talking about the fact the Western world should be paying attention to what's happening in the gold market, because it's telling you the rest of the world's getting more concerned about, the debt levels, the treasury auctions, the geopolitical risks that are taking place, valuation matrix in U.S. equities. And so that's what we're seeing. But again, the third part is the narrative. There's no real narrative creating money flows into the underlying equities. And we'll get into it in a little bit here, because, you look at some of the disappointments, one being Newmont last week. Those are things that chill the equity investors. But going back to your question, when a freighter changes direction in an ocean, it usually goes in that direction for a long period of time. And we're just seeing a change in direction amongst central bankers in the world. Since '08, central bankers have been big buyers of gold, and they've escalated up the last 3 years. The weaponization of US dollar is one of the major reasons, but also I think the BRICS nations, which are the growing GDPs of the world, no longer want to be beholden to the US dollar as the transaction currency of the world. So what you're seeing in essence, if you want to look at it in a real simple perspective, is these central bankers and these governments are now creating a new gold standard. You have to understand the fiat currency system themselves were born off of gold as the currency of the world. And if you look at the US dollar, for example, it was an IOU as collateral for the gold reserves held by the US government. And what you're seeing now is the rest of the world saying, well, here's back the IOU, which is impaired with $34 trillion in debt, $2 trillion in debt increase this year, despite low unemployment and record growth, or strong growth, that is. And they're saying, here's back the US dollar. We want the reserve currency of the world back. And that's what's taking place. But you don't hear that story in the Western world. You've heard it a little bit in the last 2-3 weeks, but that's actually what's taking place. So this trend is not a trend that this trend will get greater traction when the US dollar and US debt becomes a greater worry.
You're touching up on a few important topics here. Which one of those more specifically do you think is going to be the most important driver, though, of this bull market? Is it the death of the dollar? Is it rampaging debt, global depression, hyperinflation? There's a bunch of scary words that I could call out here, but what's a specific driver of this move?
Well, it's not the death of the US dollar. US dollar still is a reserve currency of the world because we have the strongest capital markets, debt markets. And the US has enjoyed that privilege. And that's why they've been able to escalate their debt to 34 trillion, because the rest of the world buys their debt and transacts in US dollars. There's not one, or there's a multiple of things that are taking place here. What you're seeing is a culmination of years and years and years of debt increases and printing presses of central bankers. Global debt's gone from $200 to $300 trillion in the last 10 years. And the printing presses of central banks has continued. And so if you really look at it, gold supply has increased 1% a year for the last 15 years. And so gold has stood the test of time. Gold's purchasing power relative to all the other currencies has done very, very well, because central bankers and governments abuse the privilege of their currencies. And we've seen that time and time again. And that's just the natures of politics and getting elected. People spend. We have an election coming up in the States in 10 days. And either one of the candidates, they don't talk about the deficits because they can't change the deficits. They're going to keep on spending. So the deficits are going to continue to get bigger and bigger. And when you have interest costs where they are right now, interest costs on the debt has surpassed military spending. And when you have Medicaid and Social Security, getting more taxed by the aging of America, there's a greater concern about the deficits.
Seems like they might even want to leverage the economy more from here on out, based on a couple of things that I've heard so far. But do you think we'd get out of this centrally managed, debt-dependent economy and in overregulated markets as a result thereof in the course of this gold bull market? Like, does this bull market have the strength to reset, if you will, everything and bring us back to a more normal economy?
Well, we've got 40 years since 1981 when Volcker put the stamp out on inflation. We've had 40 years of an asset appreciation market. We've had the bond market, stock market, real estate market. Sure, we've had speed bumps along the way, but we've had major asset appreciation. And 3 years ago, as I was saying to clients and on interviews as well, money was free, and it's created bad behavior. People overpaid for assets and over leveraged for those assets. Well, we still have an environment where we have assets that are very leveraged and overpriced. And in Canada, for example, our real estate market is definitely showing signs of weakness here. But we have 5-year mortgages. In the United States, 30-year mortgages, 2.5%. That's what's been one of the major reasons why the consumer stayed strong. But I still look at the debt worries of the world, and I'm very concerned about that. I think that at some point here, that will come back, and that will be a burden on the economic growth. We're seeing, China's economic situation deteriorating. Germany, next year they're not reporting on their guidance. England's back into recession, and I think it's impossible for the U.S. to have a strong economy when all these other nations are suffering at this point.
Having mentioned China, do you think we'll need China ramp up gold buying again before we can get into the next leg higher? Or what do you think ignites the next leg higher, if you will?
Well, gold buying in China, they reported 2 months in a row where they were not buying gold. But if I'm trying to accumulate a position in a company, I'll pull my bid and wait for it to soften a bit before I go back in and buy. So, I mean, China is increasing their gold reserves. What they report and what they actually probably have are two different numbers. And they are one of the largest gold producers. None of the gold leaves the country, and they're importers of gold. And so they, in essence, are increasing their gold reserves because they view gold as I've referred to it. They're looking at creating their own gold standard. Because if you look at it, you can own the U.S. dollar, which has $34 trillion in debt, and treasury auctions. Next year, they have to refinance $7 trillion worth of treasuries. Well, what happens if the treasury auctions aren't in big demand from foreign buyers? Who's going to keep on financing the treasury market? And those are the things that in the last couple of weeks, some commentators on CNBC have been talking about, concerns about the treasury markets, right?
What do you think is a realistic range in that case for gold to settle at if China is moving toward, again, creating its own gold standard? What's the price of gold, if you want to call it that, or the gold to dollar exchange ratio going to be?
I don't ever put a target price on gold. But what I will say is that these central banks are increasing their gold reserves. And so, for example, India transacting in oil with Russia, they're using gold as collateral for those transactions. So if the price of gold increases for these central bankers, it's a great benefit to them. So I can't put a target price on gold, but when you only have a 1% increase in supply and these central bankers continue to buy and stick it away, I mean, some of these symposiums held by the World Gold Council, you have 260 central banks attending these. And yet nobody talks about that in the Western world, but these central bankers are getting more and more concerned about the US dollar and US dollar holdings. And so I think the gold positions amongst central bankers, this is not just a 1 year or 2 year phenomenon. This is a phenomenon that was being in place for a long period of time because the world debt problems have not gone away, and printing presses of central banks will never disappear. So you're looking at a currency of the world. If you're looking down the world today and you had to choose between different currencies, there's only one currency that has no political attachment, no debt obligation, and no printing press. That's gold. And it stood the test of time. And it's trading at all-time highs, and no one's talking about it. That's why I'm so bullish on the equities.
And I do want to get to talking about the equities right after we talk about silver here. But really, Cam, why I ask you about where do you think gold settles here is first of all, because I want to get a price target out of you and put it in the title of the video, get a bunch of views, but also because I'm thinking about risk reward. I mean, you got to be aware of what's the potential reward here versus the potential downside. So how do you look at the risk reward on gold?
Well, I think one of the things that, I remember in 2003, we were buying gold at, or gold equities when gold was at 360, 380, down to 340. And when it went through $400 in the Dixie US dollar index, broke 100. That's when gold took off, and that's when the gold stocks really took off. Well, the Dixie right now is at 103. It touched 100.5 a few weeks ago. Then long rates started to rise, and so the dollar rallied. So I think what you've got here is a phenomena where, I think the equities and gold right now are still to be bought, and especially the equities, because no one's really paying attention to this price action. I think that's a really important factor here. I mean, I don't know where, next 2 months, 3 months, 5 months, but I just know over time, the price of gold is going to continue to go higher. And as it goes higher, the financial positions of these gold companies gets better and better and better.
Supposedly. And then something that I also want to talk about, because it's not always been the case, and I also want to see where you're putting your clients in the meantime. Let's just briefly touch upon silver, though. Silver is finally outperforming gold on a year-on-year basis,
Yes.
on a year-to-date basis, though, too. That's something you predicted last time we spoke, I believe, as well. Would it make sense to start getting into silver here more heavily than gold now, or is it time to wait? How do you see that?
Well, silver is a leverage play on gold, and we're finally seeing catch up here. And one of the problems with silver is when you got to that 31, 32 price point, there's a lot of legacy positions, physical positions held. And so typical investors, when you get back to break even, people get out of investments. So we had to eat through that. The silver to gold ratio, when gold was at 2000 back in 2012, silver was $50. Now we're at 27.50 and silver's at $34. So, I think the leverage play is definitely silver. One of the problems from an equity perspective is there's not a lot of pure silver plays to invest in. And so, but if you're playing the commodities, I think silver is a leverage play. And one of the things that happened, people don't know, but in August, we had a situation where India lowered their import tax on silver from 15 to 8%, opening up for their citizens to buy more silver because gold price was moving higher. And so that's another component of physical side.
So from here on out, though, you still think that silver is going to keep outperforming gold, like, or is the? I mean, this seems like the beginning of that happening, really.
Well, like I said, I mean, going back to 2003, gold broke 400, and then it went to 860, then down to whatever 650, and then went to 2000 after the financial crisis. I think we're in the setup of. I know it sounds crazy to say, but at 2750 gold, the rest of the world's really not paying attention to it in the Western world. And I think the same thing with when gold was at 400. But if you'd asked me, a year ago, and where our stocks would be at 2750 gold when opposed to 2000 gold, I would have thought they would have been materially higher. Now, granted, our mid tiers and seniors have done very well, and but when it comes to exploration and development stories, they're moving up, but there's no money flows coming into the gold funds yet, and which is shocking. But when you look at the fact that everyone's still playing the arena in the U.S. equities and AI is dominated, and cybersecurity software, et cetera, the money flows are going there. Bitcoin, of course, no one's paying attention to the equities and the gold equities. There is, but the masses aren't. We don't have big ETF flows yet.
So what if we're talking about silver, let's say in 12 or 24 months, and we have triple digit silver, which let's say gold gradually keeps moving up, goes to 3,000, which is, a year ago might have sounded strange, but now it just seems like it's just going to happen at a gold to silver ratio of what it's going to be. Well, even more than 50 still, which is still above the historical average. We're at triple digit silver. That wouldn't surprise you.
No, again, I don't put price points, but silver is a byproduct too. A lot of times, there's very few pure silver plays. When I say pure silver, over 52% silver production is primary silver. But silver is typically a byproduct, and you're still not seeing big capex spends on these big projects where silver is a byproduct of a polymetallic deposit. Here's another example. We saw Gato taken over, Silvercrest taken over. And some of the other silver names didn't respond positively. And you would think in a normal market, when you see two major players taken out, that money with flows would go into other silver names that are potential targets. But the sheer fact we didn't see that, it was another indicator to me that there's not a lot of money in our space, right?
Yeah, and specifically with silver, what do you? Is it not having money in the space that's kind of holding the stocks back? I mean, if you look at the SIL index to the GDX index, for example, it is outperforming it now, just as silver is outperforming gold, but barely.
Well, like I said, price action creates narrative creates ETF flows, and we don't really have strong ETF flows. I mean, even the gold, going back to gold as a barometer, the gold ETFs in the United States, they're still, I think it's 2,600 tons. It was 3,500 tons. So the U.S. investor hasn't come in. I think the big swing play is going to happen when U.S. investors recognize why gold and silver are trading the way they are, and they recognize they have to increase it as part of their portfolio. And what's going to cause that? Deficits, poorly attended treasury auctions, geopolitical risks, which are going to be around for a long period of time. And I think when they get more concerned about valuations in the U.S. and I'm still in the camp that we're still going to slip into recession. I think this market, the market is disconnected from the fundamentals of the economy. You look at the retail sales numbers that have been coming out in companies like Starbucks and other middle income consumers, and it's not a strong economy.
It's also, there's an argument to be made that the underperformance in the equity is earned when you look at the cash flow margins and the sizes of the cash flow of the gold miners. For example, you brought up Newmont, but looking at the other quarterly reports, it's not looking too pretty. And that is my opinion, because I would just have been, I would have expected the gold equities to do better, but I would have also expected their cash flows to be higher. So what's your main takeaway from these quarterly earnings reports?
Well, first of all, to use Newmont as a barometer is a bad barometer. I mean, but as I say that, it is a barometer in the market because it's the only S&P 500 listed gold company. The last week when it delivered its numbers, higher costs, lower production, stock was down 15% that day. And it was really disappointing to see because for a lot of generalist funds, they view that as a barometer. But what I look at is the other companies in the sector. The other barometer, in my mind, the most realistic barometer is Agnico Eagle, and it's trading near all-time highs. And so, you have to look at the specific companies. Barrick and Newmont, Barrick's gone from 8 million to 4 million ounce production. I mean, Newmont's costs are rising. They also operate in two of the biggest, most expensive labor pools, United States and Australia, which are very expensive labor pools. So I look at a lot of my other names. My seniors are up 50, 70, 100%. Mid-tier, same thing. Look at a company like Lundin Gold, for example. Now it's debt-free, pays you, I think, a 4% dividend yield, and a year from now they're going to have $1 billion in their balance sheet. So there's a real success story in terms of margin expansion and deleveraging on their debt. Whereas Newmont, they're still digesting, the Newcrest, and but they're a behemoth. And when you have a behemoth like that, I think it's really hard to manage your costs, opposed to some of the other companies that are more nimble.
What's the main problem here, though? Like, Newman's not the only one. It is unfortunately the bellwether of our sector, and it's kind of what we're sending out to generalist investors, as in, hey, this is what a typical gold business looks like, which is not the case, as you just mentioned. But what do you think is the main problem with those companies that are underperforming? Is it bad assets, bad managers, high inflation? Who's to blame for this poor performance in the cash flow margins?
Well, first of all, there's some great companies that have done very, very well in terms of performance and lower costs and increased production. But I think, there's a number of things. Labor costs are still a problem. I mean, I hear that time and time again. Energy prices have been coming down, so that should help with margin expansion. I think you have to look at it from a year-on-year basis, not a quarter-on-quarter basis. Because from a year ago, we are seeing margin expansion by about 70% on average. So, the other thing too is that one of the things about these gold miners is a lot of them don't have quarter by quarter consistent production. Typically, they have rainy seasons in some of the jurisdictions they're in. So you do have weaker quarters. Third quarter typically is a weaker quarter for a lot of these tropical or rain season oriented assets. And so you will see drops, but then you see fourth quarter strengths. But if you look at it from a year-over-year basis, we are seeing margin expansion at this point. But again, the mining industry is a very tough industry. You have a lot of jurisdictional risks in some places, and so you have to factor that in. That's why having a portfolio of companies is so important.
What part of your portfolio have you dedicated to the producers versus the smaller companies, as in developers and explorers?
I've got seniors, intermediates, and small producers and developers. Grassroots exploration, I'm not touching at this point. There's just no money going in the ground. At Beaver Creek conference, you can see a lot of these juniors walking around. They aren't even registered for the conference because they can't afford the registration fee because there's no money going into the space. And once again, I'll say that it's indicative of the lack of investors in the marketplace, in the resource market space of today, because last cycles when we had a resource investment um, um, investor in Canada, there'd be an audience looking for these things because there's those stories of stocks going from 10 cents to $30, like Great Bear, for example, and you think that would keep igniting the exploration because there is those lottery ticket success stories, but we don't have any money in the space right now. I was talking to Denis Larocque from Major Drilling, and their stock was down 15% one day because of lower revenues because these junior companies just don't have any money for drilling, right? That's 2750 gold, which is shocking.
And there's two things that I'm thinking about here. One of it is money managers coming back into space. I spoke to one of the few longstanding gold money managers in the space, Greg Orell of the OCM Gold Fund. He's been at it for over 30 years. And he gave me a comparable answer to yours. He said, I'm not touching exploration in that way. That's basically what it came down to. It's still more exposure to the other. So do you think money managers come back into, sure, they'll come back into the gold space, but are they just going to go for the cash flowing companies, or are we going to see them, relative similar to what happened in the 70s and the 80s, where money managers were going after exploration companies and they had geos on staff and so on and so forth? Do you think that ever comes back?
Well, it's so funny. Question whether it ever comes back. All bull markets are perpetual. And so when the greed comes back into our arena, no question we'll get that again. Right now, you have a lot of people like, okay, gold's at 2750 and my stocks are up 50%. I'm surprised they aren't up higher. So people are worried because things aren't reacting as much as they should. The big thing is, and Canada, mining capital of the world, we've seen a major transition in the industry. A lot of wealth management now are wealth management who buy ETFs. You don't see the stock pickers like we used to have. Even CalPERS, California Pension Fund, they said about 6 months ago they do more ETF investing than managed investments because that's the way the investor has gone. Now you look at the speculative investor. Well, the speculative investor chased, digital and cannabis and all these other sectors. And so a lot of them got hurt. So we don't have the speculative investor like we had in the past. So when you look at people like run a business like I do, there's very few wealth management people in the country that specialize in metals and mining because they moved on, to passive fund investing or other sectors. And that's why, I'm extremely bullish as well because, I remember being in 2002, 2003 buying these gold equities and no one was paying attention. And I find it unique to think that I'm in the same position right now despite gold at all-time highs. And that's why I think when the money flows come in, there's a finite amount of these companies. And when the money flows come in, we're going to see some serious price action to the upside.
Well, what's going to be the spark that starts that fire? That I go back to that same question though. Is it M&A? I mean, we've seen a little bit of M&A, but we haven't seen the Newmonts and Barricks going for heavy M&A.
Well, I mean, it's so funny. What's going to spark it? Well, we're already in it. I mean, we're up 50, 70%, 100% on some of these stocks the last few months. And you're asking me what's going to start it? Well, that's a pretty nice return.
No, I mean,
And
what's
so
going to start what's going to spark the return of money managers to being stock pickers and into the exploration space specifically?
price action. And I think also when the other sectors stop performing. I go back to an interview that Amar from Inigo gave at the BMO conference last year, and actually it was in June. And he said, because again, they're a good barometer of the big generalist funds. And he made the comment that the big generalist funds are keeping an eye on gold and keeping an eye on us, but they're having to play in the same arena because they're performance driven. So they're in the Microsofts and the Nvidias, the Apples, those type of names, right? ServiceNow, because that's where the money flows are going. But he says in that interview, which I find really interesting, but these big generalist funds are getting more and more concerned about deficits, debt, valuation matrix of U.S. equities. And in the interview, he points out that they say to him, since 1925, there's been 15 market corrections where the market's corrected by 35%. And of those 15, 14 gold went up by 45%. So I find it very, very interesting the fact that Agnico Eagle is up from $63 to $120, created all-time highs 125 last week. So it tells me some smart money is paying attention. But the money, the performance is still happening in those tech stocks and that. So I think when they've exhausted themselves, I think then we start getting money flows really coming into our space. And I think the trigger on that's going to be greater worries about deficits and, treasury auctions. I mean, how are you going to keep on financing a treasury auction if your currency is going down and your interest rates are going down? And you have the rest of the world that is really wanting to transact more and more out of the US dollar.
And again, thinking about the juniors, where my portfolio is leveraged in is M&A, going back to M&A, because a lot of these guys I talk to, most of these guys really I talk to with CEOs of exploration companies, their exit strategy is M&A. They're like, oh, we're going to get acquired and we want to find something that's worthwhile for a bigger company. And so I've kind of always thought that, oh, once M&A kicks off, that's going to signal to the broader market that money is going to start flowing into the little guys. And price action begets buying, begets price action, so on and so forth. That's kind of how I saw it. What do you think?
Well, we've seen a lot of M&A already. But again, because there's not a lot of money in the space, it doesn't ignite speculative fever of other companies. Classic example, when Silvercrest was taken over, $1.7 billion market cap, one of my big positions is in Vizsla Silver, and the stock was down 5 cents that day. In a normal market, you would have thought it would have been bumped up with, a valuation matrix comparison, and the thought that perhaps, 6 months, a year and a half from now, it could be a target as well. The fact there's no real money in the space is exemplified by the lack of price action that you're referring to. So the other problem too is that as a junior company, some of these junior companies are run by people that have that exit strategy that I'm just going to explore, find something, and someone's going to buy me. Well, there's so much. It's a very complicated industry. I mean, you've got to de-risk, grow, and de-risk your asset, and that takes years and years and years. I mean, from first drill hole to first ounce now, on average, 18 years.
Yeah.
So in these junior companies that are exploring and trying to increase their resources, and then they have to go through permitting and environmental studies, et cetera, it's very capital intensive without any cash flow. So they're constantly having to issue shares, and they're consummate issuers. And so they're kind of dead in the water until we start getting some real money flows coming in, because, they raise 5, 10, $15 million. Well, they have to come back to the wicket 6 months later and raise more money. Right?
And it seems more like it is, again, a question of when and not if. When the money comes back. But when is that? I mean, that is a fair question too, right? Well, when can you expect that to happen? Because of time value of money and so on and so forth. Like, is this something that's going to happen in 1 year, 3 year, 5 years? When do you think that's going to happen?
It's already happening. It's already happening. Again, going back to Agnico, smart money is positioning. So what you're looking for is, when does the small investor, the retail investor, come back in spades?
Yeah.
The biggest bull markets start in a stealth fashion, and I would argue we've been in a stealth bull market for the last number of years here. But in the last 6 months to a year, we have money flow coming in. We have smart money going into situations. Like I said, a lot of our stocks are up 100% here, and so it is happening. And the sheer fact that you're saying when's it going to happen exemplifies my point about the narrative hasn't created the real money flows into the passive funds yet. And Main Street hasn't recognized this bull market despite gold trading at all-time highs, because again, they're trying to figure out if Tesla's a great buy, or Nvidia, or these stocks they've been playing in for so long.
Yeah. Well, that is exactly what I mean when I say when. I understand what you just told me, is that it's going to happen when these stocks become less sexy, if you will, when they stop performing the way they have so far. But is that the generalist investor coming into the gold space? Is that something that happens soon? Like, is that a 1 year thing, a 3 year thing? Like, when can we expect them to come in?
Well, I mean, every bull market follows the same path. Doesn't matter what industry it is. You get the lead companies coming through first, then you get the the mid tiers, then you get the next tier down, then you get the speculative money at the very end. And so if you're referring to the speculative money, we're still a ways from any of that happening, right? The junior stuff, I think, is going to be still a ways away because people have to make money and feel confident we're in a bull market before they start taking money and going down and taking greater risk on those type of situations. I mean, the train's already moving. Question is when do the real money flows come in? And the managed money, I think, is still going to be challenged because nowadays most people just buy ETFs. I mean, the number one trading instrument in the United States amongst independent brokerage firm is buying call and put options on ETFs. And so that's where the speculative investor is playing. Trying to convince the speculative investor to come in and buy a junior mining company and that's just drilling and may see production in 7 years. The time frame of investors goes, well, why would I bother when they can trade these things on a daily basis? So I think the real drive is going to be when the passive funds come into the ETFs and they get sprayed into the underlying stocks. I mean, in previous interviews, I've talked about that with cannabis. I mean, when you look at the cannabis cycle, when it went, it was all passive funds sprayed into the stocks, and it was a finite amount of companies. And you saw stocks like Tilray go to $260 a share, now $2 a share. The valuations made no sense whatsoever. So we will get money flows coming in through passive funds. And we've already seen that in the mid-tiers and seniors. When will we get more and more ETFs that come into different segments of our market? I don't know the answer to that, but every bull market attracts greed. And we haven't got that greed coming into us yet.
That is something I've been wondering about a lot because ever since I entered or started getting more serious about the space, I haven't seen any of that excitement. And I keep hearing about it, keep reading about it in the books and whatnot. But I go back to wondering, like, are we going to see explorers that have, $100, $200 million market caps, Tilray type of moves? Is that something that is still going to happen, or is this sector dead for good?
I just want to point out, you have an underlying tone that's like, okay, when's this going to happen? When's this going to happen? And the sheer fact you're talking like that tells me that we're still probably in the third inning because it is happening. And I look at the performance of my stocks and how well they're doing right now, and they're doing that stealthily. And you will see discoveries that ignite the investor when there's an audience. But we have to build that audience back because a lot of them left, right?
Yeah, exactly. I am seeing that. So my best performers are discoveries or equities that I've approached from the bottom up perspective, starting at the asset level. What I'm wondering about is the average junior, the average boring company, if you want to call it that hasn't moved in 2 or 3 years. A lot of these charts still go from upper left to lower right, specifically on the lower market caps. Whereas with these cannabis companies, for example, again, you saw absolutely unhinged valuations that made no sense whatsoever in any metric. And are we going to have that kind of a blow off top rally in the small caps here? That's what I'm asking when I say, when is this going to come?
I have no idea time wise, but every bull market, doesn't matter what it is, follows the same cycle. At the end of a bull market, stupid money goes into the speculative situations. We see major price moves. We saw that in 2.5 years ago in some of the tech stocks. We saw that. I mean, like I said, every cycle does it. And so the sheer fact we aren't seeing any of that movement right now tells me, again, we're early. Time frame wise, I have no idea. What gold price we need, I have no idea. But at some point here, people will recognize the value in our sector. I mean, a number of my senior mining companies are paying me 4 or 5% dividend yields. In the last cycle, we didn't see those type of dividend returns. A number of companies are debt-free, throwing out significant cash flow. We didn't see that in previous cycles. The sector's never been in better shape, despite the Newmont's hiccups of the world. There's so many great companies that are doing so well. And so, you're buying great value now. And we have to attract the generalist funds into the sector. Like when you have a situation like Newmont, that doesn't help the sector because like I said, it's the only S&P 500 listed gold company, and we're disappointed.
Sure, dude. Again, it is specific to the company itself, but that's not something you can explain to the market. So
that's why buying stocks opposed to ETFs. If you're buying ETFs and Newmont was a heavy weight on it, you just got slammed. But I don't own Newmont, right?
Well, this is also a good argument for being a stock picker now,
Absolutely.
ever more so than before.
Absolutely.
Hmm.
I mean, and again, there's different companies for different risk levels of investors too. Some people are speculative, some people want conservative, some people don't like regional risks. Um, you know, risks is relevant. Nevada, for example, takes a long time to permit, so there's a lot of risk with time. West Africa, you can discover a deposit and have it in production in 7 years, whereas in Nevada, it'd be 18 years. So West Africa comes with its geopolitical risk, but timeline risk is much, much better. And costs to put in production is much, much lower. And they have a very strong labor pool. It's the largest region in the world for gold production. And there's great value there. But people think because of what happened in Niger that West Africa is a risky place. I would argue there's great value there.
Is that where most of your money is right now, geographically, if you will?
No, I'm 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 in various parts of the world. It's I've got companies that have multi assets in different jurisdictions. I've got companies that have just one or two assets or one asset in one region. I have a basket of companies, and I've got my preferred companies, and I've got probably five or six that I've got on very tight radar right now, and that I'm very interested in. But I'm just looking at the entry points. Because again, it's timeline. If you're a year and a half away from permitting, there's a dead zone of news. And so there's no sense of urgency. But as I say that, some of those assets, as they de-risk them, will become targets when the M&A really starts happening. Because you have to understand, when you're a senior or an intermediate company, you're now starting to look 3 years out and going, okay, what are we doing for replacement? What are we doing for growth? There's no tension in the boardrooms yet, but there will be tensions because there's fewer and fewer assets available.
You're actually making a very good point that although it is time to be a stock picker right now, it's probably also not the time to go down the quality trail, right? Like right now is the time to get involved in the high quality discoveries because they're already trading at reasonable valuations, but they're the
Absolutely.
one that are going to attract the most attention first. So there's no need to go into the pounds or ounces in the ground type of stories right now.
Well, I didn't say there's no need. I mean, you never know when something's going to, come along and get taken over, right? I mean, Cisco, takeover by Goldfields, which just closed last week.
Mhm.
That's a $4.4 billion takeover net, right? Like a Silvercrest just taken over. We've seen numerous takeovers taking place. Um, you just never know. No one's going to sit up and ring the alarm bell that something just started, right?
Well, how do you pick them then in that case? Like, well, what's a good M&A target if that's part of your strategy? What are you looking
Quality
for?
assets, quality assets, quality management teams that are progressing the assets and de-risking the assets. And when you can buy some of these companies at $25 an ounce in the ground, and they're marching towards permits, and there will be significant producers. That's attractive
Hmm.
because we used to. I mean, $25 an ounce in the ground. I mean, where do you find these things? They're very, very rare.
I, I'm not. I'm curious that you're bringing up that ounces to EV to ounces in the ground ratio. Essentially, is what it comes down to. I'm normally not a huge fan of that ratio. Why do you think it makes sense to use it now?
I just use it as an example because it's something we used to use in the past. When gold was at 350, $400, we used to use $50 an ounce in the ground back then. The reason I mention it actually is because I remember in 2001, I was buying Eldorado and Bema Gold at the time, and they were like $5 an ounce in the ground, and nobody's paying attention to them. Well, try to find and discover and get to a resource category in a market that has gold is such a scarce commodity. Try to put that together in a jurisdiction you can mine it, and you're paying $25 an ounce in the ground. The timeline spent and all the money spent to get there is just represents how dirt cheap the some of these opportunities are.
Hmm. Is that how you think the majors look at it too? Like, is EV to ounces in the ground part of their valuation metric?
No, it shouldn't be. Shouldn't be.
Yeah.
It should be a return on capital. That's the other thing too. A lot of these resources that come out. I mean, there's resources and there's real resources. And that's why, when I focus on companies, I deal with management teams I've worked with in the past, and I know they know what they're doing. I mean, to be an explorer, and just to arm wave something, you actually have to make it work eventually. And, there's management teams I've worked with where we've had 3 or 4 assets taken over. Last cycle, we sold 8 companies to mid-tiers and seniors, and we were major shareholders. So my formula, I'm just staying disciplined with my formula. And what I find shocking is I don't have a lot of competition in the capital markets in wealth in Canada. And to me, it's so obvious because eventually people are going to wake up to the value proposition.
Again, a question of when, not if. What companies is the examples that you can give me? What are you looking at now? Any names?
Well, I don't like to give specific names, but I've got my seniors, my mid tiers, my evolving mid tiers. I was very instrumental in putting a deal together that's now evolving into a 500,000 ounce producer. Those are the type of companies I'm focused on. Like I said, the junior explorers, it's just no rush to get into them. I'd rather wait for the discovery because a lot of these companies, if they have a discovery, they have to raise money because a lot of them don't have a lot of capital in the first place. So I'll wait for the discovery, and then then I can get the client on speed dial, and we can get our whole team at Canaccord looking at it very closely, and we can decide. But the chances of finding deposits are very, 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 very high risk. So why do I put capital risk there when I can buy other companies that are trading at 7 times PE multiples and are growing, right? That's a better place for capital.
That's why I want to know what those names are. Why do you not like sharing your names?
Well, it's just, I've got numerous names, and, I've been at conferences where I recommend a couple, then my other corporate clients go, well, you didn't mention us. So I just find it's a safer arena, right?
What about teams? You said teams are important. Who do you like? Yeah, I don't think we have that many good teams left because with the money leaving the space, a lot of good people also left, logically so.
Yeah, but you have to repeat people that have sold previous companies, right? And as I say that's one of the challenges in the industry too, is that human resource talent is getting thinner and thinner. You have an aging population of geologists and engineers, and you have a youth coming up through the education system that aren't going to spend 5 years, on the ground being a geologist. So we have absence of human resource talents, and that's one of the problems in the industry, and that's also leading to problems in some of these assets because they don't have the expertise to evolve and manage these assets. So it is a big problem.
Yeah, that is one of the biggest problems in my opinion. So that is a very good
Absolutely.
point. What else, Cam? I know you have to run here. I don't want to stretch it out too long and take too much of your time. What am I forgetting to ask you? What else is important to talk about here?
Well, I think one of the key things is that, you have to keep perspective of just go back and listen to this interview again about what my message is. My message is that the world hasn't changed. The asset prices have, and gold's at all-time highs, and the market's not recognizing it. Everyone's still chasing U.S. equities, despite the fact the U.S. has a $2 trillion deficit, despite the fact China's having an economic hiccup still, Europe is still sliding into recession, England's in recession. A lot of the fundamentals of the world that I've talked about in the past still exist. But yet people look at the stock market in the United States and think, oh, everything's great. Well, you still have, the Mega 7 driving valuations. But you start looking at the fact that Boeing has gone from $400 to $150. Disney's trading at $95. A lot of these companies, you look at, Starbucks down 15% 6 months ago because of lower revenues. Fundamentally, the economy is in one situation, but the money flow is going to U.S. equities and passive funds into these ETFs and the S&P are really misguiding the investor about what's really going on in the economy. So I would argue that, debt is still a problem. Geopolitical risks are obviously not going to go away. And the US dollar is losing its primary reserve currency status, and gold is stepping in. Central banks in the world now hold more gold than they do the euro. And I'm not saying gold is going to replace the US dollar. All I'm saying is US dollar's role amongst the BRICS nations and the autocracies for transaction is getting less and less. And what they're doing is they continue to buy gold, and they're creating a gold standard for themselves so they can transact outside the US dollar. And when the US investor realizes that gold is going higher because central banks around the world are going to continue to buy gold, and investors should have it as part of a portfolio because of debt worries and financial worries and also valuation worries of US equities, that's when the money flows will go into the equities. So believe it or not, we're still in early stages despite gold at all-time highs.
Well, I didn't think you could do it, but you summarized the entire conversation in what, about a minute or so. So let's close it off here. That's a good point to drop it up. Thank you for stopping by, Cam, though. I appreciate the insights as always and hope we can catch up soon, maybe sooner than a year from now. It is curriemetallsandmining.com for people listening who want to know more about Cam. And again, Cam, thank you so much. Feel free to drop off in the meantime, as I'll be traveling to West Africa, as I mentioned, and then Nevada. But of course, not before my favorite part of every episode, and that is, of course, the disclaimer. And then we're going into the CEO barbecue, I promise. But there's a warning on your screen right now that you're obligated to read, but you're also just better off doing so, because this is not just your regular, generic disclaimer, although it is that too, but it's an actual warning that will help you not lose money potentially. Which, by the way, losing money is the norm and should be the expectation in this sector. It's a venture capital business that is not easy to deal with, and money is part of it too. I am here to make money. This YouTube channel is a business that makes money from its existence, specifically from companies paying for the production of video interviews. This is what this thing is. Okay, in this episode specifically, Awalé Resources has paid for the production of their interview, but that doesn't mean that you should look at this episode any different, because even the companies that are not paying, so Western Exploration has not paid for theirs. This is the first time I'm talking to them, so I wanted to get to know the story myself. But they are still likely seeing their participation in this program as a chance to do some marketing. So start by understanding that really all company communications online, I used to say most company communications, but now I'm starting to believe it's all company communications online, albeit this interview or the company's presentation, their Twitter account, what they're saying on LinkedIn, their news releases, even their website, all of that are marketing tools. Those are not research tools. Those are marketing tools. And although I don't make buy or sell recommendations because there's a clear conflict of interest given the nature of my business, many out there do. And you should be aware of that inherent bias. That bias won't always be clearly disclosed with everyone out there. So it is safer for you, anytime you're watching any type of company-specific content, to approach it with a dose of skepticism. And most of all, treat it as marketing. Understand that it is meant to look good. Unfortunately, I'm not a magician, though. The guests here are not psychics, and the CEOs are typically normal people. So we don't possess any superior knowledge about what will go up or what's going to go down, what's going to go in circles. Nobody really knows. Also, unfortunately, try as I may, I call this show the CEO barbecue, right? So it is meant to grill the CEO. And try as I may, I'm not always going to catch all red flags or all challenges with the company or all shenanigans, whatever it may be. And although you shouldn't tell my wife this, I'm not flawless. Matter of fact, I still have no idea what I'm doing. I don't have a long enough track record where I can stand behind it and say, look at what I'm doing. I'm the big thing. I'm not. I really don't. I lack the experience. So this is all to say that you shouldn't blindly trust me or anybody on the internet, and you should do your own research always at all times. If you don't understand it, don't do it. In addition to no guarantees, no guarantees are going to be made here besides one, and that is that there will always be forward-looking statements in these conversations. These are conversations that are general and impersonal in nature, containing hopes for future events that may or may not take place, depending on many different factors, both within and outside of the company's control. Be aware of that. Be aware of the risk to investing and the increased risk of investing in venture capital businesses. And please talk to someone who's proven to you to know what they're doing and talking about, like a professional investment advisor, a licensed professional investment advisor, which I'm not. The guests here are not your investment advisor. As well as, again, I'm going to say it again, do more research and before taking any decisions. Research you do on one place, and that is setterplus.ca. That is a government official website. All companies are obligated to file their official documents on there. Those are not marketing documents. That's your MD&A, management discussion and analysis, that is, financial statements, management information circular, and the NI 43-101 technical documents. That's the non-marketing documents, although there will be some marketing speak in them as always. But if you don't like losing money, go there. That's where you do research. Those are the official documents that you should look at. There's disclaimers on your screen right now. Again, if you don't enjoy losing money, please read them and be careful out there. With all that said, though, I'm going to shut up now and kick off the CEO barbecue portion of this Real Money Talks episode by traveling all the way to West Africa and Cote d'Ivoire specifically. I'm not going to give you a 10-minute fancy intro because I've done, I don't know how many, countless interviews with Andrew here of Awalé Resources over the years. I did one, 2 weeks ago, I believe, Andrew. We sat down and we talked about Cote d'Ivoire as a jurisdiction. So for people listening, there's going to be a playlist on the YouTube channel. So if you click on the Resource Talks logo and then you go to playlists, and then you can look into it, or you can do Command F or Control F, and then you can look for Awalé Resources. That's where their playlist is going to be. That's where you can, hear more about the company and understand what they really do. But Andrew, I'm rushing to talk to you here because you've just had a news release sometime last week, I believe. And it was a very interesting news release because you had an accompanying video with it that talked about termites. So like they're not quite ants, but they're kind of like ants, and they go deep into the ground, and then you sample them. And you have uncovered what you call, so you don't call it a discovery yet. You can talk to me about why not, but you've uncovered 3.5 kilometer gold footprint on your 100% owned ground. So this is outside of the joint venture that you have with Newmont, but it is on trend from the BBM discovery. And the BBM discovery was 75 meters of 2.4 grams gold equivalent, I believe. And that BBM discovery was on, or is on, the Newmont joint venture. This thing is along trend on your 100% ground. Just to clarify where we're at here, and there's probably going to be a map on the screen right now. But talk to me. What does this mean? You don't call it a discovery, then what is it? What's happened here?
Yeah, so I think the first thing to clarify for us is that, we don't call a newfound geochemical anomaly a discovery. So for us, a discovery is after drilling, you have got economic drill intercepts within an early stage drill program. So and hopefully they're coherent across at least, say, a couple of lines or a few holes. So that is for us what might constitute a discovery. But a geochem anomaly for us doesn't constitute a discovery, because there are lots of geochem anomalies in the world, and not all of them are actually really discoveries. Like when they get drilled, there's not, there might be gold or copper or whatever the anomaly is underneath, but not in an economic quantity. So if you can demonstrate that you've got economic grades when you drill an anomaly or a new project, well, that's a discovery. And so I feel quite strongly about that, really, because and look, I know that quite a few of the bots and things picked up on the news release because we talk about the BBM discovery. It ended up getting incorporated and called a discovery. But for us, we've uncovered a big geochem footprint. And so going into your actual question, we've uncovered a big geochem footprint. I think it was greater than 37 ppb is the what we showed in the picture. And so that 37 ppb anomaly is coherent over, with this 3.5 kilometers, so over 10 kilometers now. So, and that's going from sort of up near our Orlando project down. It gets broken up a little bit down through BBM, and then now out into our 100% Cienso property. And so that 3.5 kilometer anomaly, if you take the midpoint of that anomaly, it's roughly 4 kilometers away from BBM. And we know we don't have detailed mag on this permit yet, but, from the broad government mag, it matches up. And so we can be very confident that it is on the same structure or on the same structural trend or a long strike from BBM. So, that's exciting for us as well. So we know that this structure is well mineralized from the 28 holes that we've drilled now in the joint venture property on BBM. And so these are the sorts of things like always, after raising the money, I said, we want to go off and rate and rank targets and do the broader scale work and all that sort of thing. But if anything sticks up as a high ranking kind of anomaly, well, the fact that it's on the same structure that's got demonstrated mineralization and economic grade mineralization, and we're only a couple of kilometers away, that makes it a high ranking target in anyone's terms. So, we're really excited to pick up on this straight away. So sort of that's where we are. And the BBM anomaly itself, when we drilled those first 4 holes, we actually took a leap. Andrew and I sat down and talked about it and went, we've seen this before in the other drilling that we've done. We've had high order termitaria, and what we actually drilled was termitaria lines that were on a 400-meter line spacing at the time. So we effectively with the discovery hole was drilled under that under a 1.23 gram, 1.3 gram termite mound, and then there were other ones around it that had plus 500 odd PBB anomalies with them as well. And then the ones on those 500 meter step outs, the termites that were there were kind of in that plus 200 to 500 range as well. So we drilled those 4 holes, made the BBM discovery, followed that up, and started to join the dots, if you like. So it's a similar story where we've got the higher order termites on the Cienzo permit, and so we've got that very high order or that peak value, but there are other termites in the area that are in the 200 to 500 ppb range. And then with the soil sampling, where again, when I was there in that webinar, I was trying to explain that the regolith is variable, so there is some transported zones where the soils get sort of masked, if you like. They're not necessarily seen through the cover, and then there's other areas where we're getting not a shallow or a shallower cover, and then they're showing up as coherent anomalies as well. And so where we've got that right regolith terrain or soil terrain, the soil samples are plus 100. There's the core of them are plus 100 or getting into that range, but also up to 500 ppb. So where all these things just play into giving us confidence in the fact that we follow that trend and say that it's a coherent 3.5 kilometer long anomaly, and it's really exciting stuff.
You made the BBM discovery under a similar sample, so it was a 1.2 gram sample that led you to drilling success, essentially, where eventually it was 75 grams of no, it was 75 meters of I wish it was 75 grams over 75 meters. We wouldn't probably not be talking right now. But
that's Charger where we get those grades at the moment.
True, yeah. So it was 75 meters, about 2 grams.
Yeah.
But the termitaria sample was 1.2 grams. That was the sample that led you to. And now you have at Cienzo, you have 1.3 grams peak. How confident are you that this could yield similar results to BBM, especially considering, again, the variability of surface sampling results and also the variability in copper grades in the anomalies too?
Sure. Look, you make a point there. The copper is lower tenor, but we know that everything that we've done and the drilling that we've done and the prospects that we've drilled, the copper gold ratios are variable, so we've got, like, having no copper doesn't preclude getting decent gold grades. So we're not, the fact that we're getting copper coincident with the gold and along, along that same structural trend. That's just for really from a geochem perspective, we see it as just as another tick. And there are other pathfinders in there that we use that are coincident, and the multi-element sort of lithogeochemistry that we've done, which is getting into a little bit more detail. They're all speaking to each other in the right way. So, look, what are the chances? Look, we don't know until we drill. You honestly don't know until you drill those holes, but the fact of the success that we've had with the termitaria in the past, and where we're getting those higher order termitaria, we feel like that there's an increased chance of success because we've got that sort of tenor coming out, and other ones that are in that high order, like background is like 5 ppm, right? So you're talking something that's 5 to 10 ppm background, and you're talking 100, 200, 300, like multiple up to 1,000 times background. So or 100 times background, sorry. And so there is a level of confidence, but you don't know until you drill. And like we said, in that news release, I did discuss the fact that we want to do some IP, which we will do in November, December, and that will just help us. The orientation IP at BBM has really showed up that contact between the intrusives and the meta sediments quite well, and we sort of think that we'll get that same thing, like start to see the same thing with the IP at Cienso, and that's the thing. So if we are picking up on that structural contact, and then the soil stack up on the geochem stacks up on top of that, when you put those layers together, that just gives us that increased degree of confidence that we're drilling in the right place. And then beyond that, when we were walking around, there is what we call float, which is like disconnected but large boulders. So it's not actual connected bedrock, it's like floating around, but they were large boulders, so it's probably not far from bedrock. As well as things that even looked like pretty much like subprop, which was sort of semi-connected to bedrock, if you like, of intrusive, quite strongly foliated, which means like strained, it's been pushed or pulled around, that is exactly the same as the hanging wall rocks, or the hanging wall intrusive rocks at BBM that host the bulk of the mineralization. So we've seen geology on the ground that is the same as BBM as well. So, and that's, when we were walking those traverses, looking at the termites and looking at where the anomaly was. So, there are already those little layers, that when you do your integrated geology, which is layering up all those things, other people call it fairway mapping, but it's layering up all that information to make sure that when you go to drill that you're in the right place.
But essentially this is on the same trend as what you mentioned as BBM, so same structure of feature essentially. Yep. Is that structure of feature on BBM directly correlated with mineralization?
Yes.
So why isn't it obvious now that it would be correlated to mineralization on Cienso as well, if it's the same thing?
But well, with any geochemistry, you get some form of dispersion. So, you want to layer things up, like from whatever geological mapping you can do, and then also the geophysics that I was talking about to narrow that down. So you might want to go and spend a whole heap more money and drill big long fences with drill holes, and then you drill all these dry holes, and then you hit a structure, and then you drill dry holes after, and you might not know that until you get the assay results back. Or you just put in that extra 10%, and be prudent with your money and put in that extra 10% and try and, instead of drilling something that's that wide, you're trying to drill something that's this wide. And then you can target your holes better and increase your success rate with drilling, which is the highest cost exploration that you have.
I know your motto or whatever your website says is defining a new world-class copper gold district. Maybe you should change it to we don't drill dry holes. That's instructive as well too. Because what's your success rate been so far, by the way, just as a tangent here?
That's something that Andrew and I have talked about, but we haven't actually calculated the actual success rate. But off the top of my head, I would say that we're, I don't know, of getting mineralized intercepts that then turn into, you know, defining things. So there's mineralization in the drill holes. It should, I'm sure it would be over 80%.
So
And
8 out of
then
10 holes you've drilled have come back
mineralized. Yeah.
okay.
Yeah. I reckon 7, 8 to 10 out of 10 holes would be mineralized that we've drilled of our diamond drilling. Yeah.
That directly correlates to cost. And I've mentioned this in pretty much every video I've done over the last couple of months, but there's 3 things I look at when I'm picking companies for my portfolio, and that's size of the prize, cost of the test, chances of success. Well, that middle part, cost of the test, is very important. This is West Africa, so it is already a bit cheaper, but the higher your success rate, the lower that cost of the test is. So that's why I care about it.
BVM's a really good example of that. So we've drilled 28 holes now. We've drilled 28 holes at BVM to find something that's, you know, a mineralized envelope that's over a kilometer and a core with decent grade that's at least sort of 600 meters long now with 28 holes. And I think it's 6,800 meters. So I won't do the math, but, you know, because we don't have a resource yet, but, you know, that discovery cost is extremely low of something that looks like it will be significant. So, you know, that discovery cost is very, very low.
So how many holes have you drilled again? What did you say?
28 holes.
20. What's your average cost per meter drilled?
Per meter drilled and assayed, it's about 180 drilled and assayed.
Canadian?
100, no, US, 170, 180, roughly, something like that. Yep, 170, 180 drilled and assayed.
Okay.
Drill costs about 130 and assay costs are around, you know, 40, depending.
So how many meters have you drilled in those 28 holes?
6,808.
6,808. Yeah, I'm just going to run it through a calculator, not trying to be a smart ass here.
But yeah, I don't know how many ounces there are, but, you know, it's not, you know.
You spent $1.2 million on it. So, and this is me speculating. I'm not a geologist at all for people listening, but if there's 1.2 million ounces at least, which by the looks of it, people can go and do the old volume by density by grade calculation and figure out what could be in there. I would guess you'd be under $1 per discovered ounce in the ground.
Yeah. So that's, yeah.
That's me saying it and guessing
that's
here
what
again.
It is, you know, that's, but yeah. So, you know, that's, you know, what we try and do. We really try and be prudent with our exploration dollars, and we've had, you know, really good success through that, and it's through, you know, sometimes it might take a little bit longer to get through things, but on the other hand, you know, we've, you know, by being prudent with your exploration dollars, you can drill more meters in the end and make more discoveries, because, like I said before, discoveries are actually made at the drill bit, and the drilling is the most expensive thing that we really do in exploration. So, you know, we just want to maximize what we get out of that high cost expenditure.
How expensive was this termite program though? What is it like? How do you even measure? Because it's not meter, is it per sample? How do you measure?
It's a per sample cost, and it's roughly like collected and assayed for gold. It's roughly $17 a sample. So we do PXRF gives us our a pretty good multi-element geochemistry. And, if we think we've defined something and we want some more detail, we might do some selected. I'm getting into too much detail, but, we might actually do some ICP later, particularly with the Awalé stuff. But the PXRF gives us, I think 50 or 60 elements, I can't remember, or 50 odd elements, which is most of the pathfinders that we use, except for gold and silver. So we send them off to the lab for gold analysis, right? So and that's what that cost is at this stage. So it's $17 a sample, and I think a roughly $10-12 a sample out of that 17 would be at the lab. It costs us the guys have become extremely efficient at sampling, so they can collect 30 to 50 termitaria samples a day.
Every time I hear PXRF, my suspicion meter kind of starts going off, because I know a lot of companies would use. I don't expect you to do that, because you don't even want to call this a discovery. So I don't expect you to be over promotional on that part. But how do you mitigate potential false positives off the PXRF here?
You don't get false positives really with geochemistry, because the levels that you're talking about, for copper and arsenic and all those things, they're many times above detection limit of the PXRF. So when you get into all grade things with the PXRF, you do need to be much more careful, because particularly in the higher grades, you might actually be underreporting. And if you're, and so you can get, so I guess you're talking about when you're talking about, we're going to get a little bit technical, but when you're talking about chemistry and labs, you talk about precision, accuracy, and so lab analysis tends to be more precise. So within much closer standard deviations from what the value actually is in the rock or the sample. That's so, and then so something that's precise and accurate means that you're consistently getting the same result for the same sample. So with the PXRF, it might not necessarily be precise, but what you're looking for is repeatability of what it thinks is precise. So when we do our quality control, we still have running on our standard, we run standards through the PXRF all the time. We get this consistent value, or for what is a known value in that standard. So, but you might get more variability up and down, but you get this, effectively straight line, but your standard deviations might go up and down a little bit more. But so when you're looking for geochemistry, you're looking for trends in the data. So you want to make sure that that's in there, like you're in that range. And then when you're getting, so then you've got confidence that the assays you're seeing are somewhere within that range. And that's all okay. If you're trying to sort of use the PXRF for your drill results, you could never use it to estimate a resource. You could never use it for those sorts of things, right? It's not accepted by industry, and it probably never will be with the portable XRF. There are very high-powered XRF machines in the labs, which give you much more accurate results. But yeah, so we're going into a bit of detail, but with geochemistry, confidence, no problem.
Can I think of this, and I'm going back to the first question of what does this mean for the project? This is a sampling method that is not used everywhere. I think Australia is one place where it gets used sometimes, but not as extensively. This is typical to West Africa, but you don't see it being used every day. So that's why I'm wondering, what does this really mean for the discovery process? And I'm wondering what I can compare it to. It's not drilling, although these termites, they do go 30, 40 meters deep sometimes, but is it kind of like trenching that is typically like 2 meters or whatever it might be, but kind of on steroids, if you will?
Yeah, so like trenching or pitting, or like you dig pits, and you're just trying to dig pits that's through sort of any lateritic material or cover or anything like that. Or the other one would be auger drilling. So, for me in the past, in some environments where you don't have termites, but you've got a transported sort of lateritic cover, which is masking things underneath, you might use an auger drill. So the auger drill is just penetrating that cover sequence, and then you're getting an in situ sample from 5, 10, 15, I don't know, depends on the regolith meters below, and making sure you're getting. So really, I would compare it to an auger drill would be the best thing to compare it to, because you're just ensuring that you get at least a portion of your sample that is from in situ material.
Okay. So you want to follow this up with IP. That's how you typically follow up trenching too, I suppose. Yeah, talk to me about that. When, how much, and then more specifically, what are you hoping to get out of that IP? Like, what should I be on the lookout for in that news release when I see it? What do I want to see in it?
We would just like to pick up on a structural trend that matches up with the geochemistry within that. The chargeability anomalies at BBM itself are probably going to be higher. I would assume at the moment would be higher, because there is all the copper and there's interconnected sulfides, and IP is all about how chargeable the rocks are. So we have got lower order copper at Cienso, but it's still there. So you would hope that the rocks are somewhat chargeable. So you would hopefully pick up through that gradient between chargeable and non-chargeable, some kind of anomaly that's showing up, that structural trend.
Could water be a challenge here? Because I know that it's just been the rainy season in Côte d'Ivoire, so
water actually makes IP better. You can also pick up on aquifers with it, but effectively, everything's a little bit wet, so you increase that conductivity, but it's pretty consistent. So the key thing is because you're pumping a current into the ground, because the ground's a little bit wet, you get a much better sort of connection. So you don't have some sort of faulty electrical connection. You get a much better connection into the ground. So the generator is actually pumping more current into the ground, and it can actually work a bit better. So the thing that we do have is that the footwall at BBM is actually carbonaceous kind of sediment, and carbon can actually be so things like graphite are highly conductive. Very, very conductive. So there's potential that we might get issues with the sedimentary rocks that are in contact with the intrusion. But again, that might also just be all we need, because you've got the intrusive rocks, which are not very chargeable, and then the sedimentary rocks that might be, and that might just show up the structure as well anyway. So, but they're the things that you're looking at with the IP.
Okay. And then what on a timeline or a time frame? What do you think? When does this IP start? When am I going to see a news release on it?
Yeah, I think. Look, when we walked the ground, there were quite a few rice. So there's quite a bit of dryland rice grown as a subsistence crop, and we when you do IP, you walk lots of lines, and so the harvest for that would usually be in late October through November. So we'll probably do it after that, because to walk lots and lots of lines through subsistence crops is not cricket in Australian terms. Is not good for community relations, even if you're paying compensation and all those sorts of things. Subsistence crops are what people use to feed their families, right? So we'll wait for the harvest to get going, and then do the IP.
When's that? I mean, if you had to be specific.
October, November is harvest. So we would be looking at the IP in November, December, and then, as I mentioned, we think that we can, we were looking to drill in the first quarter of next year.
Okay? You sound certain on it, so I assume permits, locos, and everyone's happy. I mean, government, everyone's happy with you just going and drilling, and you have to take care of something else.
We don't need a permit to drill. We just need a social license to drill. So it's all part of the community relations thing. And so if there's and that's the thing, like all those subsistence crops, rice, corn, maize, millet, sorghum, whatever, they're all done by December, January. So when you're actually bringing in the heavier machinery, it's usually not really an issue. And when it comes down to like cashew trees and things like that, we try to adjust our program where we can to make sure that, we're not damaging too many cashew trees. But of course we pay compensation for those, but they're cash crops. And it's a little bit of a different sort of situation to subsistence cropping.
So drilling Q1, there's nothing to stop you, essentially. You have the money, you have the social license to operate there. Assay results on the back. I suppose you're not able to tell me how much drilling you want to put into it, but you have maybe a first pass idea of like how many meters are going to go into this.
Look, off the top of my head, I don't know how many meters would go into this at this stage.
Yeah, you'll probably do a separate news release, I assume, to talk about the drill targets.
I think once we've done the IP, we'll have a handle on how many meters we might want to drill.
I'm just trying to figure out timeline here for a potential new discovery. Why I'm kind of wondering about this is
hopefully the end of toward the end of Q1, at the latest, maybe even before.
Why I'm asking is because assays have not been as quick as I and I'm a little impatient, but I know as maybe you would have liked to. I know you're working kind of on a local, getting your own lab, essentially a prep lab, so that might help. But is there something you can do to speed up that whole process?
Oh, look, we're constantly talking with labs, and not just the labs that have been our preferred user for the last, operator for the last couple of years. So, recently we've had some, well, I would call it interest because our level of activity is rising. So we might have a little bit more purchasing power and also power to get our results turn around better too. So that's something that we're working on right now is A, cost per sample, and B, turnaround time. And you did mention our portable PPB lab that's coming. As an initial indicator, we can potentially use even with diamond drilling. So it would just be a potential indicator, but by collecting the fine material, like so when you cut the core with the core saw, there is all this fine material, so which we could actually collect and dry and use as a sample. So that could be something that is, a much, you're only cutting a line that thin through the drill core, but there's enough sample to do an analysis on, so that could potentially give us a very quick indicator of whether we're onto something or not before we even get the assay results back from the lab. But that's something that we could that is a possibility, but it's not from an accredited lab or anything like that, but an indicator of mineralization anyway.
Yeah, but it can help you have quicker turnarounds, I suppose.
Yeah, and then potentially we can use that to drill another hole or two if we think we're onto something. If we drill a couple of holes and we're actually getting some good indications from the portable PPB, we can add a couple more holes to the program and maybe actually delineate something very quickly even before we've got the first results back from the lab. So
And that lab
it's a really important tool in that manner. We can get gold and silver results along with because it's a PXRF that actually does the gold and silver, but you've got a reagent and you actually analyze the dissolved sample. You to get the gold and silver, but then you also, from the bulk sample, you've still got all the PXRF. So we've sort of, within 48 hours maximum, we would have gold and multi-element results from our drilling.
When do you think you're gonna have that lab on site and installed by the time on time to drill?
So it's been delayed, like in shipping. So I think globally shipping's been an issue, and we've got caught up with something coming all the way from Australia. But it is on the water and due to arrive in the next I don't know, it might be only a week now. And so then we do our customs clearances, and then we need the training. So we've got training booked in toward the end of November, and then the lab will be up and running to go, like between, before, I would hope, before Christmas.
Right. Okay. That would be a nice Christmas present right there. I know for you and the other geos on site. What's the story here? That's what I wrote down to ask, and it sounds like a weird question, but you have so many things going on. So Charger was the very high grade that you drilled last year. It was 45 grams over 32 meters. BBM, you've mentioned, is a geologist's dream, is what you've told me before. It's a not tabular ore body, so that could work out. We haven't even, there's little time to talk about Scepter, which is a nice copper intercept that you've hit at Scepter East. Lando is the biggest anomaly that you have on the project so far, which it's almost 5 kilometers long or something like that. And now you're coming up with stuff on the 100% land. So you have many things, many irons in the fire, if you will. What's really the story of Awalé here?
Look, the story of Awalé is still to find, big, like large scale tier 1 size deposits and or projects. So there are multiple things going on. So, what we do is we on the joint venture properties, we keep drilling those targets that you were talking about. We start to drive some of them towards a resource level. We're starting to do some initial metallurgy on BBM. Those samples, we've got initial metallurgy samples ready to ship. They're in Abidjan, ready to go. Then, on the 100% properties, we do have to do that basic geochemistry and build them up. But I guess, we're telling people that we've already made discoveries, and there's, I think there is significant interest in what we're doing, not just from Newmont, but from other producing companies. So I think we can sort of say that one day there'll be a mine in the Odieni district. The biggest thing on the joint venture properties at the moment is actually figuring out that scale. So there'll be a lot of drilling over 2020, over this field season into sort of July, August. We don't have the budget from Newmont yet. I've got an inkling of what it will be. I think there'll be a lot of drilling between now and August. Okay. And the aim of that drilling is to, one, shift forward the discoveries that we have made. Two, bring up the pipeline targets, Lando and Scepter East. There is also a discovery that we never talk about anymore, which we need to bring back into the picture, which is Empire. So all those things Empire will start to come into the resource inventories, those sort of things. So that's what's happening on the joint venture. And then on the 100% Awalé properties, we will drill Cienso or the new target on the Cienso permit. I'm sure that the IP, I feel confident the IP will talk to the geochemistry, but then we have to go out and do grassroots things. And I've always said that that takes time. So we'll work our way towards the northwest. We'll have to do stream sediment sampling. We have to do all those follow-up sort of things. The portable PVV doesn't work for stream sediment sampling because we're talking about fractions of a ppb detection limit. So they do go offshore for very particular analysis to get those very low detections. But then that goes into the geochemistry, which then goes into drill targets. We will fly aerial surveys. We will, start this, in 2025, start to build up drill targets on those properties. And so, yes, there is a lot going on, and maybe it's difficult for people to separate all that out. But, I guess the key thing is to try and understand the fact that we are in a big mineralized system. There is confidence within the company that this thing is district scale. So when we move along those structures into our 100% Awalé permits, that there's going to be more geochem anomalies that we're going to rate, rank, drill, and that in the joint venture, we actually starting to push towards resources and things like that in 2025 and 2026. So, it is a big thing to understand, but BBM for a small company looks like it'd be something that would be standalone. Charger is super high grade. We haven't completely understood it yet. We're working on a new model for the next drill program. We've got some really interesting structural ideas coming into play now. And so we'll be testing that. And I think Charger, like I'm starting to digress, I think Charger's been misunderstood. And we have not drilled any director specials. We have drilled scissor holes and step out holes to try and understand what Charger actually looks like. And so what we've reported with 83, hole 83, 88, and I think it's 87, that are in the periphery around that 83 discovery, that there is already some strike length to that, as well as some width. Like the width from the midpoint of 88 to the midpoint of 83 is something like 50 or 60 meters, and that's telling you how wide that breccia is. And 88 is 580 gram meters, and 83 was 1500 gram meters. And we're now getting results coming through for those last holes of BBM and Charger, and they're looking really interesting. So, there's scope at BBM. It's not, we haven't drilled holes all in the same direction. We're not drilling director's specials. We're actually trying to figure out what that Charger system looks like. And so, I just think there's just more and more exciting things to come. And the fact that we really put in that extra 10, 20% in understanding our geology and making sure we don't drill dry holes. Maybe people get frustrated with us, but I would argue that it's that extra 10 or 20% that's created the success that we've had. And when we can't change that, we're not going to change that, because that's not our way. So we have a way of doing things, and it makes it is what delivers that success. And so I can't change that. People might think that we should be doing things this way or that way, but I think the proof's in the pudding, in what we've done. and I feel quite strongly that we will keep doing things that way because it works.
Off the top of my head, I know at least a few Howie Street dwellers, if you want to call that, or promoters, who would just be arm waving off the rooftops if they had land positions like the ones you have and results like these ones. And I don't know if anyone's going to be unhappy with you if you keep coming up with grades that you have so far. But talk to me maybe a little bit more about that strategy here, because you said it takes time, but why does it have to take time? As in, why not go more aggressively at it, kind of a spray and pray strategy, which oftentimes doesn't work. But in your case, the probability of it working might be higher because you already have all these. There's a bunch of targets that you can go and drill right now. Like you can go to Scepter East and put, 2 1 kilometer holes into it. You have 10 million of your own money, but Newmont's also financing that work. So why not spray and pray, be more aggressive with the drilling?
I think, well, there's two things there in that we do on the joint venture permits, there is Newmont as a partner and it is their money that we're spending. So we are looking for tier one things. Like this is what we're looking for. We're looking for big scale projects. So, that sort of spray and pray on a single target doesn't fit in with that strategy, right? We actually need to be more holistic and think about all those targets and how they fit in together into what is a bigger strategy of what might one day be, a 5 million ounce project, right? And so when you've got a project that big, you need to bring all those things into play because you need to know where you're going to put a mill, to process multiple deposits, how that's going to be processed, because we do have copper and gold mineralization. Like there are all these factors that need to come into play and need to be thought about now, and not like well, we should have thought about that before, and then you've started to look at things in the wrong manner. So I think that's a big factor in something like that as well. So we're not thinking about things in that manner like a junior company. We're thinking about them in terms of tier one big scale system. And so and then it's budget as well. So, Newmont, we tell Newmont what budget we want to have, and the joint venture agreement is for $15 million spend. So there has to be some sort of prudency within that $15 million spend to actually give Newmont decision milestones on whether they want to be in the project or not. And so the way we've done things is Newmont are still in. I can actually say now I haven't made an announcement, but we have got a budget extension again this year. So there is faith in what we're doing from Newmont and how we do it, and it's helping them get towards decision milestones on the project as well.
You have, just trying to get the exact number here off your presentation, but let's call it a third of the company is owned by institutions, and that does not include the 11-something% owned by Newmont and 8.5% owned by ORCAP. But I'm talking about institutions. Franklin Templeton, Commodity Discovery Fund is on there, I know. Commodity Capital is on there. A bunch of other institutions that are on there.
Yeah,
is that
Brahma and others? Yeah.
Who's that?
Brahma.
Brahma is on there. Brahma Asset Management's on there. Who APAC Resources, Extract Capital. There's a bunch of and again, about a third of the company is owned by them. What are they telling you when you talk to their technical guys? Is that how they want you to approach it? And what are they most excited about when it comes down to the Awalé story?
Look, I talked to a lot of them at Beaver Creek recently, and they're like, the feedback is that there's comfort in what we're doing. So, there's no, they understand that goal, and they understand that, we just need to get in and do that early stage work and build the drill targets on the 100% permits as well. Well, the other thing is that, look, built into that financing, there's a warrant at 80 cents. And so there is a internal target there for us too, right? So, that's a 2-year warrant. And so there's an internal target in there for us as well involved with that. But, those guys understand what we're doing, and there's comfort in what we're doing, and they know that they understand that, right. So the next phase of BBM is an exploration plus sort of infill drilling phase. So, chasing, looking to understand what the system does along strike and both down plunge, as well as a little bit of infill drilling, if you like, within that 600-meter zone that we've defined at this stage. And then, people want to see us bring things like Lando and those things into the equation as well. So those things that I've discussed, there is comfort from those institutions in the conversations that I had at Beaver Creek that we're on the strategy is good.
Well, I'm happy if they're happy, I suppose. I would be happy if the share price was doing well, but I'm not going to complain because I'm still up, and that's a rarity for me. What else should we be talking about here? I'm just kind of looking through the news release. I think we've touched upon everything around that news release. I'm still waiting for a couple of holes off a Charger and BBM, so I suppose we'll be having a conversation. I hope we'll be having a conversation soon, are we?
Yeah, I'm sure we will be. That'll be interesting. And look, the thing about with our share price, I suppose, all I can say is that, that there will be plenty of drilling this quarter. There will be drilling this quarter. There'll be drilling all the way through until wet season hits again in July, August next year. And so, I think we're working on our result turnaround, as I mentioned before. And so I think, there will be plenty of excitement over the next, over that sort of, what is it now, 9-month period. And then as results continue to come through in the wet season, I think there'll be plenty of interest in what's coming out of the ground from the drilling over that period. So, I do, you always hope your share price is going up, but we'll be drilling plenty of holes to give us, the chances of our share price moving with more good results from both the joint venture and the 100% Awalé properties.
Well, I sure hope you're right, Andrew. I remain a shareholder for now. I will be watching, and I'm hoping we'll speak again soon on the back of those. Again, you've got BBM and Charger assays coming, but so I'll definitely be around. I know we'll be talking in the meantime. So thank you so much for doing this. Appreciate your time. I'll let you drop off now. It's always much appreciated. Good overview, but I have a long trip to make all the way up to Nevada this time. And Nevada is, of course, called the Silver State, but I'll be looking for gold this time, and high-grade gold specifically. Luckily, I'm not going alone on that journey, as I'll be joined by Darcy Moore, the CEO of Western Exploration Inc. Western Exploration is listed as WEX, so that'd be WEX on the TSX Ventures Exchange, where an average of about 40,000 shares trade each day, and where I also see a 52-week high of $1.50 and a 52-week low of 48 cents. There are only about 45 million shares outstanding, and with today's $64 million market cap, that means WEX is trading at $1.40 per share. Adding 3 million options and 11.5 million warrants leaves us at about 58 million fully diluted shares. Directors and management here own about 3% of the company, while Agnico Eagle owns about 14% of it. with an additional 37% being owned by different institutions, private equity fund, and high net worth individuals, leaving only about 46% of the company's shares outstanding, which is specifically about 20 million shares in the hands of the market. The last officially filed financial statement on Setter Plus, which shows the numbers as of June 30, 2024, had $4 million in current assets on it, most of which at the time it was specifically $3.9 million in cash with some prepaid expenses on top of that as well. It is worth noting, though, that, again, this shows the numbers as of this summer, but Western Exploration recently closed a $1.7 million financing with a strategic new shareholder just at the end of September. So that's not reflected in these finances, but will be in the new ones, of course. So the financial situation might be different by now. That's the whole point. Total liabilities at the time of that last financial statement sat at about $1.2 million, with $440,000 being due to related parties, and of course, some reclamation provisions on top of that to the tune of $600,000. In terms of operating expenses, the 6-month period that ended on June 30 this year costed Western, and this is excluding share-based compensation and depreciations, as both are non-cash expenses, of course. But so that period costed them just under $1 million, $906,000 to be specific, which is an average of $151,000 per month. The largest element of that spent was office in general, which accounted for about 65% of that total spent, with salaries accounting for another 20% and legal and regulatory fees accounting for another 10% of the overall spend. As to the exploration and evaluation costs, the total amount spent was $273,000 to be specific, which is an average monthly exploration spent over the last 6 months that equals $45,000 per month, with 80% of that cost being geological consulting and geological work in general. So little to no drill cost at the time, and why that's the case will make sense here in a minute. But in summary, $150,000 a month went into administrative costs and 45 went into the ground, leaving us with an exploration to administration ratio just about 0.3 to 1, meaning roughly 75 to 76% of the money spent over the last 6 months of this calendar year went to administration and roughly 25% went into exploration. As always, though, please understand that this financial statement is nothing more than a snapshot in time. In this case, it was specifically at the end of June of this year, and it simply shows you what the finances looked like on that exact date and nothing more. Finances, though, are a fluid thing, and math could be hard, especially if you're me. So it is imperative that by the time you're watching this, you visit the company's website as well as setterplus.ca to look at the most up-to-date numbers yourself and make sure you're getting the full picture. For Western Exploration, that full picture is fully focused on Nevada, and specifically on the Aura project, which is a 6,000 hectare land package that houses the Tobby George, Gravel Creek, and Wood Gulch deposits, which are 3 zones making up the company's MRE, which was published in 2021. The document of which is, of course, available and should be read by viewers on setterplus.ca. But the gist of it is that this is a 665,000 ounce gold equivalent deposit with a gold equivalent grade of 1.7 grams per ton, with the size and the grade comprised mostly of gold with a little bit of silver, which is why I said equivalent. But so really most of it, so 85% of the grade and 85% of the size, for that matter, too, are made up of actual gold ounces. Notably, though, this is over the 3 deposits combined, and they're rather different. So Gravel Creek and Wood Gulch are volcanic-hosted epithermal sulfide deposits, which would have to be mined underground, while Dobie George is a Carlin-type deposit, but a sediment-hosted Carlin-type deposit. So it is closer to surface and can be mined open pit. And the gold there can be recovered through a simple heap leach process as well. It is precisely the Gravel Creek deposit, though, that the company is currently trying to expand, with the initial assays results from the 2024 GERO program just having come back 3 or so weeks ago, showing the results of 4 holes drilled for a total of 2,800 meters, with the highest grade intercept that you can see in that news release being 111 grams of gold equivalent and 68 grams of gold equivalent. But notably, as expected in epithermal deposits, these are narrow intercepts of respectively 0.5 meter and 1 meter in apparent width, with the true width being estimated at about 80 to 100% of the apparent width. And also respective depths of about 655 meters. Those for the first one. So for the higher grade, the 111 grams was at 665 meters over 1 meter. and then 445 meters deep for the 68 grams over 1 meter. This drilling also expanded the project boundaries that contain the resource, so a new updated resource might be underway here, which is something I hope Darcy and I can get into later in the conversation, because this actually smells like a PEA prep work, or so potentially a PEA might be coming. Again, I'm speculating at this point, though. In addition, some met work on Gravel Creek has come back late last month too, showing up to 95% gold recoveries and almost 90% silver recoveries in a locked cycle flotation test in a combined gravity and flotation concentrates. So again, something to talk about later on, and I hope we'll get to all these things. But then lastly and briefly, there are also other exploration targets. I'm not going to go through all of them, but the company believes that they can contain more discoveries and the potential to keep expanding the existing resource. Again, all of which I hope we'll discuss later today. But not before a CEO Barbecue special question here first for you, Darcy. This is, again, your first time on the CEO Barbecue, so you're going to have to explain to me, who are you and why should I trust you with my money?
Good question. So who am I? I'm a geologist by training. I've been in the industry for 41 years now. So as we were talking earlier, Antonio, I started in uranium. I'm from Saskatchewan, Prince Albert, Saskatchewan, by birth. I started in uranium in the 80s. When the uranium price started to, go down in the late 80s, I moved over to gold. I started with Homestake Mining Company in Vancouver. I ended up going down to South America with Homestake in 1991. I spent from 1991 to about 2005 in South America, both in Chile and Argentina. In 94, I joined Meridian Gold, and we made an important discovery called the El Peñón deposit in Chile. El Peñón has currently produced about 5 million ounces of gold and probably somewhere in the neighborhood of 120 million ounces of silver. So very significant discovery. Then moved on to Argentina to run some projects as VP of Exploration for Meridian. And in 2007, the company was acquired by Yamana Gold, where I became Senior Vice President of Exploration for Yamana, running their worldwide portfolio of exploration, and then ultimately Executive Vice President in charge of strategy, which was putting together exploration development into mine plans and trying to build that pipeline for growth for the company. So my history has been focused on exploration and discovery, been part of several important discoveries. And I think as it goes in the past, quite often it goes in the future. So, directly to your question, why can you trust me with your money? First, I've built a team here led by myself that are proven explorationists, that we've made discoveries in the past, significant discoveries in Chile, one in Mexico called a Mercedes of about 2 million ounces. And our VP of Exploration, Mark Hawksworth, and I were both involved with the Malartic Odyssey discovery when we were at the Malartic joint venture with Yamana and Agnico. So it's a team that's been put together for discovery purposes to find grassroots projects, take them through that exploration discovery phase right to development. And that's what we've done in the past, and we're looking forward to doing in the future. I'll add on to it as well that we're very prudent. I noticed that you put together some numbers on cash spend and stuff.
Yep.
We try keep our G&A as low as possible. We reward our management through future success through options and shares rather than cash out the door. So we try to keep our cash going into the ground. And I think, as you said earlier, Antonio, with the spend, certainly we looked like we were doing a lot of G&A versus exploration. But again, our exploration programs really start end of June and go right to the end of the year. So we're back end loaded on the exploration costs here.
That is something I want to talk about later on and see how that ratio is going to even out at the end of the year as well. But you mentioned the team here, which is a good point maybe to talk about insider ownership, because I mentioned that's at around 3%, so rather low. How come? And are there any plans for increasing that through open market purchases or participation in private placements or something else?
Yeah. So that 3% is a little bit of a misnomer there. That's 3% in the public market. But you'll notice that we have one large shareholder called Golconda LLC. It's a private equity group. Board and management also have about 3% of the company within Golconda. Golconda was the holding company when Western Exploration was private before it went public. So that investment still sits within Golconda LLC. So really, management board is about 6 to 6.5% of the company, and all of that was purchased on the open market or through private placements in the past. So We don't count a lot of shared disbursements that the board and management have received from the company. Most of it has been purchased either through private placement or open market.
So what do you think your average cost of capital is, and how much of that 6% you think is you personally as a CEO?
Well, percentage wise, I don't know, but it's about 500,000 shares, and my average cost would be about $1.50 to $1.75.
Okay.
When we were private, it was well over $2 the entry. So when you average it all down to some of the public market purchases I did last year when the stock was underperforming, and what I did originally, it'd be about 500,000 shares and an average cost of capital about $1.70, somewhere in that range.
Right. Okay, that's fair. You just mentioned that it was a private company that put together the asset and then sold it into Western Exploration, I assume. Do you or any of the other team members own a royalty on the project personally to any of your names?
No. We don't own any royalties. The royalties are held by third parties, and they've been on the project since the 90s. So no, the interest in the project is solely on an equity basis.
Okay. Are those royalties buyable, by the way? Is there anything you can do about them, and what are they?
There is one that is buyable. There's a 1% overall royalty held by Agnico Eagle that we can buy out at any time. I think it's a 5 million, and then it ramps up to a maximum 10 million after 10 years.
Okay, that's fine. Do you own any, and where I'm going with these questions is going to kind of make sense, but again, I'm trying to figure out how aligned would we be if I bought the stock today, because that's one thing that makes it easier for me to trust companies. You know, I ask you, why should I trust you with my money? If you trust yourself with your own money, it's easier for me to trust you as well. Do you own any service companies, be it a drilling or helicopter, consultancy, water delivery company, or something like that is currently delivering services to Western?
No, not at all.
Okay, that's easy. Do you have any other positions, and do you typically participate in the open market?
I do. Last year, I participated quite substantially in the open market on Western. As I said, the whole junior market was underperforming last year, so I saw an opportunity to acquire. I had to guess it was probably 50 to 100,000 shares of Western in the open market.
Yeah.
I am a board member on several other junior companies, Astra Exploration, which is focused on Chile and Argentina, and Almadex Exploration, which is in Mexico, British Columbia in the United States, and then last but not least, Independence Gold, which is focused in British Columbia. The reason I'm on those boards, all of them are run by people that I've known for the last 25 to 30 years. So I tend to like to work with people that I've known, that I trust, and that I think my professional ability can help the company.
Good. Well, I just met Brian, I think last week, and so I'll be interviewing him soon as well. So that's going to be an interesting point, but thank you for sharing that. Let's maybe talk about how you plan to make yourself and other shareholders money here with WEX, because you have a lot going on. You have a lot planned, really, and have been, if I'm not mistaken, you'll be doing an updated resource soon and then potentially a PEA. But what are those things or something else? What is your priority right now for the immediate future? What's the most pressing unanswered question, if you will?
Yeah, the most pressing one is that drill program we're doing right now. Last year, we discovered a very high-grade vein system adjacent to Gravel Creek resource. So it's only 250 meters away. So it's practically connecting to the Gravel Creek, and I think at some point it will. But given its circanity, or it's adjacent to our current resource, and that it's very high grade, that is our current priority, is to expand that, because we think it can upgrade the current resource, but add significant grade that goes to the bottom line for economics of an underground deposit as well. So we're currently drilling that. As you said, we put out drill results for one hole. It was one hole, but we put out information that we drilled 4 holes, but we had results out for 1. We're following that up with additional drilling right now. We've got a total of 5 holes completed as we speak. We'll be getting those to market. If we're right on that and can add the continuity of that high grade, we see an immediate path to expanding the resource at Gravel Creek. And not only expanding it, but adding significantly higher grade to the current resource of about 5 to 6 grams per ton. Secondly, sorry, Antonio, go ahead.
No, you can go ahead, because I was going to say that is a clear target, but you have a second target there. So tell me about that, and then we'll go into each one of them.
And then you mentioned a 1.7 million Canadian financing that we completed in September. That was done specifically for the Dobie George deposit. Dobie George, as you said, is a Carlin-type deposit. It's right at surface. It has over 800 drill holes in it. It's about 525,000 ounces, starting right at surface, the majority of it, 95% oxide at 1 gram per ton. So that 1.7 million we raised is going right into updating the resource and getting a PEA completed in the first quarter of next year, and ultimately going towards a pre-feasibility study towards the end of 2025. So those are the two things that we think we can add value. One is high-grade resource expansion at a current resource of 650,000 ounces, as you mentioned. And the second is de-risking and taking to a development plan and at surface oxide deposit of about 1 gram per ton. So working on two things there.
Yeah, and I hope we can talk about all of them. With the current drilling that you're doing. You're on Forest Service land, I believe. How's I think you're permitted up to 2028. How's everything's taken care of? Like in all those things that you just told me about, you can go ahead and complete them without needing extra permits, if I get it correctly, right?
That's correct. We're permitted till the end of 2028 at Dobie George for exploration, and to the end of 2029 at Gravel Creek. Okay. Importantly, you mentioned the Forest Service. We've been permitted on a continuous basis by the Forest Service on this project since 1997 without interruption. So we have a good relationship with them. I think in the United States, you always need to have that relationship with your regulators on forest land or on BLM land as well. And I think we've done that over the years. We've built a very good relationship with them where they've nominated us to the state for several awards. We won a reclamation award in 2019 upon nomination from the Forest Service for that award.
Why I asked you, or why I kind of emphasize on Forest Service land, is because I know that could trigger heightened environmental scrutiny, if you will. In my brief experience, at least, that's happened. Is that a risk for you? How's the environmental situation?
It's always a risk anywhere, but we welcome it, Antonio. I think we pride ourselves in doing things the right way. Hence, we won that award nominated by the Forest Service. But we do a lot of work in the background. We do a lot of baseline studies as far as water quality goes, water monitoring. We've done biology studies, raptor studies for birds. And I think you develop a relationship over time with the regulators that can demonstrate to them that you have and you share a commitment to them to preserve the environment while you're doing your work. So we always look at an opportunity to do things the best way for our shareholders and for our regulators and partners in the government. But it is a risk. Environmental risk is everywhere. So you need to do it well while you're doing your exploration and demonstrate your ability to perform in those kind of situations. And I think we've done that. And this PEA that we're doing on Dobie George, that will be shared with the Forest Service so that we can commence full baseline studies leading to an ultimate permitting process. I'd also point out that we are only 10 kilometers north of the Big Spring mine and 25 kilometers north of Jarrett Canyon. And both of those operations were permitted by the same Forest Service in the past. Jarrett Canyon, obviously, in the 70s, but Big Springs was permitted by the Forest Service in 2019.
It's a good point bringing up water, because I know water rights in Nevada are not as straightforward. How's that for you? How's water availability?
It's good for us right now in exploration. We've got 2 permitted water wells, one that we use for exploration at Dobie George and the other one near Gravel Creek Wood Gulch. So we have the water for the exploration. They're both expandable to add additional water. We're in an area where water is probably not as scarce as it is in other parts of the Nevada. We do get some elevation with some good snowfall in the winter, so it's regenerating those aquifers. Our water wells have delivered water to us. Our needs have been satisfied without interruption. We also have rights for some drainages nearby that we share with Nevada Gold Mines joint venture. We have a mining lease signed with them to the southwest of our project. And on that, we can use water, do drilling, etc. But Nevada Gold Mine joint venture has water rights already approved by the state, and we've got some temporary permits with them to do offtake of some of that water.
Okay. Anything else that I might be missing that you're currently that is currently taken care of, or that you're currently taking care of, that might be a challenge on the path of reaching those goals or answering those unanswered questions that you just told me about?
Well, I think the PEA is going to be an important milestone to understand, water usage, land usage, environmental issues, as well as power issues. We do have a power line that comes down the main access road to within 5 kilometers of both Gravel Creek and Dobie George. So we'll look forward to getting some updates from the PEA on what the cost to expanding or using those facilities, both water, land, and power are. I think that'll give us a good idea of what we need to do there.
How about capital? I suppose capital is always a constraint. How much money do you have left now, by the way, and how much money would you have to spend between now and having published that PEA in Dobie George?
So we've gone through some of that capital. We had that 3.9 as the end of June, you said, then we brought in another 1.7. We've spent about, I would say, 3 million on the drilling to date. So, we had 3.9, 1.7, and we've drawn 3 off that. Our burn rate, once the drill is done, as you said, is about $150,000 a month, and add maybe 250,000 for that PEA. So, cash position wise will take us into the end of the first quarter, start of second quarter next year, easily. We'll look to get results to market as soon as they're available and that PEA. And I think at that point, then we can come to market with a plan for 2025 and finance that plan.
So that will be what, Q1, Q2 of 2025, that you'd be looking to finance that plan? That's the idea right now, Antonio, yes. Right. Okay. Well, let's talk about these results that you've been drilling on the step outs, recent assays where again, and that's all on the other deposits. So this is the underground epithermal stuff that I really had a couple of questions about. Yep. Very high grade, but also very narrow, very deep, or at least rather deep, but with great variability going from 75 grams of gold alone. So that's not the equivalent grade, but 75 grams in one of the intercepts to 3 grams in one of the other ones, all of which doesn't necessarily mean that this wouldn't work, but it does mean that you're dealing with a complex system here. So do you think modeling this and delivering it on time and on budget is still reasonable to expect after having seen these results? So far, I think yes, Antonio. Your knowledge of epithermal deposits is very good. So I congratulate you on that. They are very variable with grade. They're very variable with width. On those results you reported, those are the high grade intervals within wider intercepts above a 5 gram cutoff. So the intervals we reported were about 3.9 meters of 22 grams and about 6.1 meters of 12.4 grams, I think. So when you look at them over mineable widths, they're definitely there with grade that's consistently above 10 gram per ton. If you look at our current resource, it's about 5 to 6. Depends if you're looking at indicated, it's about 5.8. I think the inferred's about 5.1, somewhere in that neighborhood. But that has width. That current resource that's outlined is about 20 meters true width of 5.5 grams. If we look at these veins, they're 1 to 3 meters true width with plus 10 grams numbers. In our past, as explorationists and geologists, both Mark and I have worked on projects like El Peñon and Mercedes, where we've exploited veins that are average mining width of 1 to 3 meters with those high grades. The way you can do that is you don't need the high tonnage you typically need on low grade deposits. So if you can do 500 to 600 tons per day on those high grade veins, it's a significant gold production at the end of the year of around 50 to 100,000 ounces because of the grade. So our current philosophy that we're exploring with is we've got the resource right now to almost 700,000 ounces at Gravel Creek. That's about 5.5 gram per ton and 20 meters true width. And now we're exploring a vein system that's immediately adjacent to it so that if you developed a mine, they'd access both of these deposits from the same mine that would be narrower veins. So we look at doing a more bulk mining scenario on the current resource. Again, this is all hypothetical for now, but you could do something like a long hole stope or something on these wide zones, underhand cut and fill on the narrower zones, and do a combination of the two of them to do 2,000 tons a day. To a processing facility could do anywhere between 150,000 to 200,000 ounces. Yep. So as explorationists, we have that vision in front of us. What do we need to get to make this economic? And then as geologists, we make that decision. Is that potential there? If we think it is there, then let's go test it. If the answer is no, we don't see the potential to get to that number, then you don't want to make that investment in the exploration, because at the end of the day,
you're going to identify something that'll never become economic. So there's that balance between the greenfields exploration of committing drilling to making that new discovery. But once you've made it, how do you advance that discovery? Because at the end of the day, you're there to make, money for your shareholders. And the best way to do that is make a discovery that ultimately becomes a mine.
When I'm looking into something like that, I typically use kind of a checklist, if you will, of three things. And I stole these three things from Craig Perry, but he says size of the prize, cost of the test, chances of success. And because I'm obviously not a geologist, chances of success for me are directly correlated with how well the management understands the deposit. If the management understands the deposit very well, my chances of success are higher, of course. And with this last news release, you're also quoting higher grade gold silver bearing veins and breccias in the Jarbidge rhyolite, right? So again, not easy to model as far as I understand it. But and talk to me about how well, even though it is complex, as long as you understand it, I'm fine with it. But what specific geological controls are you using to define the extent of these breccias? And more importantly, how confident are you that you're not just, a couple of isolated pockets of high grade into this thing?
Yeah, no, very good question, Antonio. So the way we've approached this is we've identified the high grade discovery with about 6 drill holes. So there's 60-meter spacings on that discovery section. So when you have that density of drilling, you kind of get a confidence of how connective everything is. So what we're doing this year is moderate step outs of 80 meters to the north, to the south, up dip. So we're not trying to take these broad step outs and hit for the home run. We're trying to extend what we already know into an area where past drilling has already indicated there's some of these high grades, just not modeled. So we're trying to slowly work away from what we know into what we don't know. And I think if you take that progression and you slowly add on from what you know, take steps that you're adding on to that and that you're able to model it, then I think it gives you more confidence to take those broader step outs. So right now we're being very, I don't want to say cautious with the drilling, but we're being very systematic with it, that we're doing 80-meter step outs, as I said, to the south, to the north, and up dip, so that we can bracket what we know into the unknown and slowly step out along that. So I think that'll start gaining our trust on how to target the next holes in the next round of drilling. And it'll also give us the confidence of how to connect up the dots. One thing that's very important that I've always looked at, Antonio, when I'm drilling something, from what you kind of have an idea stepping out where you should hit something, right? So if you've got a vein and you say, okay, I'm going to hit it at 1,600 feet and you don't hit it, then you probably don't understand the way things are trending or anything like that. This last drill program, we were hitting everything exactly where we thought we would. That gives me some confidence that you're starting to understand how things are coming together. So on our drilling, again, you'll see systematic step outs. We're hitting the mineralization where we thought we'd hit it. So now it's get the assay results back. If they have the grades that are similar to what we had last time, that gives us a chance. And then when we model that, if it all connects up, then we have a really significant chance of adding a resource here to the Gravel Creek deposit within the near future.
Part of understanding that is also orientation, right? And highly outer rhyolite can result in orientation challenges, as far as I understand it. So as you're going deeper into the system, are you seeing any faulting or shearing or whatever other structural displacement of the veins that could kind of disrupt their continuity at depth, but also throw off your understanding of the deposit?
Good question, Antonio. To this point, no, we're not. But again, once we 3D model this, that'll give us a clearer indication. But the current drilling that we've seen, we're getting mineralization and alteration where we thought we should get it or where we should see it. So I think we're pretty confident that we understand the general trend. But as you said, with these narrow veins, you really need to get the drilling to a density that you can start connecting them up with confidence so that you can demonstrate that continuity for resource and ultimately for development and mining. So that'll be the next step here. Is we've done the drilling, we're getting the results back. Once we 3D model that, does that tell us that this is going to be a continuous system? Right now, I think we can say it looks like it is, Antonio. But again, you need all the results back to really demonstrate that.
Well, what are you basing that on when you say right now it looks like it is? So I understand it. Yeah, go ahead.
That section we drilled last year, we had, I think it was 7 drill holes on it, so 60-meter spacings, and we could connect the dots between all those holes. So we've answered the question that there's continuity on that one section. What we're looking at now is adding the continuity on sections to the north and south or along strike. The hole we just released, 459, is right on strike of that. Right where we thought we should get it, we got those two zones again, one of 3.69 meters and one of 6.1 meters, right where we thought. So we've extended the strike at least 80 meters to the north that shows that there's some continuity there to the mineralization. Now, we've got holes 80 meters to the south, and we're drilling another 80 meters to the north of 459. So we'll have about 300 meters of strike length that we'll have drilled out after this campaign. That'll give us a good indication. Is everything connecting up?
So good continuity of mineralization. What about continuity of alteration? And why I'm asking this is because these metallurgical tests that you had announced earlier this year were they were from a part of the deposit with a good alteration signature, if you will. Is it the similar alteration signature? Because with this new assays, I noticed quartz, pyrite, marcasite veins. So could that throw off the previously announced good recovery rates?
No, those recoveries that we reported, the samples from that, or the samples for that metallurgical test work came from the drilling last year on that discovery section, hole 456 and 457. So it was identical to what we're seeing this year. The reason we did that, Antonio, is as well, is we like to get in front of the metallurgy, especially in a sulfide deposit, because you can drill out some great grades, but if you can't recover it, what does that mean? So we know from the main Gravel Creek resource, it's refractory to cyanide because of all the sulfide. But in our technical report, and I encourage your readers as you did to look that up online, we were able to get a float concentrate from the Gravel Creek deposit that returned about 95% of the gold and silver to a concentrate, and it recovered 10% of the weight, less than 10%, about 8. So it was a very high recovery. Ultimately, that concentrate had about a 3 ounce per ton gold grade and a 55 ounce per ton silver grade. So we said, okay, if we're sure that this new high grade area at Gravel Creek is similar to this one, let's do the metallurgy now so that we can demonstrate that they have a common process. And that's what this metallurgical result demonstrated. It treats identically to the original Gravel Creek deposit. The only difference, because of these high grades, we're getting about 22% of the recovery of the gold in a gravity con before the float. So as we see higher grades, we're seeing more recoverable gold by gravity methods rather than flotation.
How come, though? Because I thought this would be refractory and therefore, tougher to recover.
Well, remember what flotation does. Flotation is a very well-known technique for recovering sulfides from a deposit. What it basically does is you agitate a tank, you put in a reagent that floats the sulfide so that when you crush the rock, this reagent attracts itself to the sulfides, they float to the top and bubbles and froth, and you scoop that off. So if your gold and silver is related to the sulfides and you can scoop the sulfides off, you're recovering the gold and silver with the sulfides. So that's what we're doing here, is recovering the gold and silver with sulfides. And then you look to either market the concentrate to a refinery or a smelter. Remember, there's about 5 autoclaves and roasters here in Nevada. The nearest one's at Jarrett Canyon, about 25 kilometers away, that treats ores like this. But we've also, in that initial test work, we haven't done it on this latest test work. On the initial test work, we could get 60% recovery of the concentrate grades through cyanide absorption. So we will do additional test work on finer grinding, intense cyanidization to see if we can get to a doré path instead of a flotation path. You give up some recovery doing that, but then you control your own destiny by producing metal on site rather than doing toll milling and transportation to get it to a roaster.
What kind of recoveries are we talking about if you go that route?
We don't know yet, but in past experience I've had, you'd probably give up 5 to 10% recovery to get to that doré path. But then again, you control your own destiny. You're producing a final product on site. There's additional capital to the processing facility to do that, but there's less capital or less loss of revenue, I should say, through toll milling and agreements like that and transportation. So you do that trade-off analysis afterwards. Are you better taking an 80 to 85% recovery to produce a doré, or take the higher recovery to produce a concentrate that you then market? So that decision is not made and won't be made for a while, Antonio.
Okay. Well, my next question would be, when do you think you're going to know something about that? But I suppose it's again up in the future. So mineralization style, alteration style, the arrow continues along the strike. As you keep moving northeast, though, is the deposit, or well, the veins in this case, are they showing signs of pinching out, or how far do you think this thing goes?
Not to date. From the drilling that we've done, the veins don't show any sign of pinching out at all. The alteration zone continues for about 2 kilometers to the north and about 2 kilometers to the east yet. So it's a very large alteration zone. So we're just testing the southwest corner of it right now. Gravel Creek occurs in the real southwest corner of that alteration zone and expands off to the northeast. That's what got us interested on this vein zone outside of the deposit, was all that alteration. A year ago, 2 years ago, we took additional samples on surface 1.5 kilometers away from Gravel Creek, and we got up to 1.5 grams of gold and 40 grams per ton silver with the same trace element suite as we see above the Gravel Creek deposit. So he said, okay, 1.5 kilometers away, we're still seeing the same level of geochemistry alteration that we see at Gravel Creek without any drill holes in it. So we think it still extends out to the northeast and the north. But we don't know how far at this point. Without drilling, you really don't know. But we know right now from the drilling we've done, we've tested about 300 meters of strike length on this new discovery, and I think we're still seeing the alteration of mineralization in those drill holes.
Without drilling, you don't know. It's a good point. And in your case, it's without a lot of drilling, you don't really know. How are you going to finance all that drilling? That's what I'm thinking about here, because there's multiple ways. I mean, do you do a JV? Do you do asset level dilution instead of equity dilution? How do you think about these things and about financing this work going forward?
Those are good questions. And those are something I think every CEO thinks of every day in the junior mining spaces. How much dilution do you want to bring in your shareholders? When do you maximize the value for them? And I think, Antonio, for us right now, the systematic step outs, if we can demonstrate a footprint of continuity of mineralization and alteration away from a discovery, people in their mind look at it and they go, okay, if we can see this length and this width, then you come up with kind of an in situ resource in your mind. That's what we're trying to do right now, is just demonstrate how big this system can be. Then that will dictate how we attack it. If we can demonstrate a system that is substantially larger than we've currently got through additional drilling, then I think at that point we'll have to ask ourselves, can you go to market and continue to finance that level of investment into drilling? Or are you better off at that point bringing in some deeper pockets that can then take that forward for you and reward your shareholders through de-risking a little bit of their investment? But also you've done the work to demonstrate what ultimately you think the project is worth.
So realistically, when do you think you're going to have that answer? That is a big question.
Ball's in the air right now, Antonio, because you don't want to make that decision too early. If you're still finding ore for your shareholders, you don't want to give that value away too soon. So I think that's where we're at right now, is that every drill hole we drill, we're extending the mineralization. So we don't know what the limits are yet. So I don't want to make a hasty decision and say, okay, we see 1.5 million or 2 million ounce potential, whatever that number is. And then at that point, leave something significant untested or leave something wide open so that somebody else can take that value. So I think we're still trying to demonstrate, ultimately, what do we think we have here? Not exact numbers, but is it 1.5 million? Is it 3? Is it 5? Because I think that's going to dictate what you do going forward and what that's worth to our current shareholders.
Well, how much is it? How much do you think it is? I mean, I know we're speculating at this point, so we're talking gut feeling, but how much is it? 1.5 million or 5? That's a big
right
difference.
Now, look at our combination of all our resources right now is about 1.3. If you take Dobie George and you take Gravel Creek and the small resource that it's Wood Gulch, and we'll talk about Wood Gulch in a second, we're about 1.3. That's in 3 different deposits, so they're different processing. So if we look at Dobie George, we'll do the PEA on that 500,000 ounce resource, see where that goes. We can't see a lot of oxide left to find there, maybe another 100, 150,000 ounces. It is wide open to depth in the sulfide zone. We have 2 holes down there where we're getting up to 5 grams per ton over 7 meters below the oxide. Why that's important, if you look at Jarrett Canyon, look at all the Carlin type deposits in Nevada. The oxide deposits were the tip of the iceberg. It was the sulfides that are below them that became the real significant part of those resources. We've never even tested that at Dobie George. But if we look at Gravel Creek, Right now, we have about 650 to 700,000 ounces in resource. We're drilling an area that's got a footprint at least that big. It's narrower, but it's higher grade. So our goal at Gravel Creek is to demonstrate at least 1.5 million ounces in resource before we make any decision on what we want to do with it. And I think we're on the path to doing that with this current drilling.
And that, I'm trying to understand which one of those two things is going to be the priority in the meantime before you can answer that question. As it at the beginning, you told me there's basically two focuses right now. So you have Dobie George and this work. Is the way you answer the current unanswered question here going to influence how much attention Dobie George gets?
They can go at the same time. And the reason, Antonio, is the exploration team is focused on Gravel Creek because we think these high-grade veins adjacent to resource can add more value in the short term to shareholders, right? Because you don't find these kind of deposits very often. Gravel or Dobie George is in the engineering phase. You know, we're doing the PEA on it right now. So it's more combining the metallurgical data that we did in 2022 with the past data, updating the resource, updating the pit design, mine model, all that. So that's going on in the background. It doesn't take a lot of our time to do that. We've got an engineering group that's going to be leading that for us. So both of them go on at the same time. So I think let's visit this again at the end of March, end of April, and see where we're at with the results in Gravel Creek, where we're at with the PEA of Dobie George, and I think the cream will rise to the top. And hopefully both of them rise to the top, and we have a tough decision to make on how do we use our capital to advance the right thing at that time. But that's a good problem to have.
It is, I suppose, but it's still a decision that has to be made in the meantime. I'm wondering.
Well, again, our drilling is funded and that PEA is funded. So it's not a matter of we can't do one or the other. They're both funded right now. So we're going to do both of them in parallel, get the results in for Gravel Creek, get that model updated. It may come with an updated resource that reflects some of this drilling this year. And then at Dobie George, we're going to update the resource, the pit design and everything to get to a PEA. So we'll have both of them early next year. And I think at that point, we can see where the most value can be generated for shareholders and pursue that. We can do both. You know, both Mark and I and the team we've put together here have worked with major companies where we've run 5 or 6 projects at one time. We can get the team to do that. It's the capital, right? How much dilution do you take on as a company and how much do you want to do?
But you don't have to grow your G&A in the meantime to keep a larger team to keep pushing these two things forward at the same time, do you?
No, the team we need to grow would be exploration focused, so it would be a cost to the exploration program, not to the G&A.
Right. Okay. Talking about Dobie George, or having touched upon it, I just had a couple of questions there, really. I didn't spend too much time because I kind of see most of the upside with Gravel Creek, but Dobie George hosted in brittle rocks, essentially, so naturally fractured rocks. Does that influence the porosity of the deposit? Could that be a challenge for bringing it into production economically?
Not from what we've seen on the column leach work we've done. We don't need to agglomerate it. At a 1/2-inch crush, we didn't see any kind of fine settling or anything like that. It leached very well. And I think, you know, the column leach work demonstrated as well that, you know, with the crush size that we're doing, we could stack to up to 300 feet height on the heap leach without doing any agglomeration or anything. So I think right now it looks like it's fairly favorable to just a standard 1/2-inch crush and heap leach. It doesn't consume a lot of cyanide. On average, it consumed about 0.4 kilos per ton of ore and about the same amount of lime. So it's not acid generating. It's very straightforward leaching. Some of the best grades occur right at surface. So you'd be into good grade right out of the gate. So you get a quick payback on the project would be our hope. So it looks like a fairly straightforward project. The only thing that's ever held it back is, you know, it was in a private company since 1997 until we went public in 2022. So not a lot of people had heard about it. And it's a 500,000 ounces. So a lot of larger companies weren't interested in a 500,000 ounce deposit. We think we can grow that a little bit, but we think we can grow it substantially into the sulfide zone yet. We have not tested that at all, except for those 2 deep holes that we drilled in 2017.
Where do the sulfides begin? How thick is the oxide zone?
The oxide's between 150, let's say 150 meter average, between 125, 170 meters, somewhere in there. And then right below that, you get a very narrow mix zone, and then right into sulfide.
The oxides, though, the host of the gold there is there's silification in the host rock. Is that influencing your gold distribution? Is there a continuity challenge here?
We don't see a continuity challenge, but I think some of the fine grained gold in the silica could be the reason that you're seeing 72% recovery instead of 80. We can do a finer grind, but we didn't see a lot of recovery improvement with a finer grind, or a finer crush. So I don't know that you get the payback on the extra capital to do that crushing. But that's definitely work that'll be done in the PEA. Is where is that balance between crush size, recovery, and capital investment?
Okay. Community engagement and everything we talked about earlier applies to Dobie George as well, I suppose.
Yes. Yeah. We have a very good relationship with all of the local landowners. There is some ranches. I would say the closest is probably 2 kilometers from Dobie George. We have very good relationships with them. Our office is in the closest town called Mountain City, which is about a 20-minute drive from site. We own a couple properties in town, and we have our office there and employ local employees from the region. So that region as well is known as a mining area. A lot of people from Jarrett Canyon live in Mountain City or in these ranches. They've worked at Jarrett Canyon in the past. And then back in, I want to say post-World War II, up until about the 80s, there was a copper mine called Rio Tinto that was just north of us, but near the community that people worked at. So if you go to the museum in Mountain City, there's a lot of mining history there from those operations, both Jarrett Canyon and Rio Tinto.
Okay. So what else would be the challenge there? Like, is there something keeping you up at night before this PEA comes? Like, what's something you're working on to solve here, essentially?
I think really it's just the size of the deposit. Ultimately, for your capital investment and the size of the resource we have, what is your NPV going to look like? You want something as robust as possible. Where we differentiate ourselves, I think, a little bit is the size isn't there, but the grade is. I think you'll see the resource grade in the pit design will be a gram per ton, maybe a little bit higher. And I think at that grade and at these current gold prices, it should have a very robust economics.
But is there no way to grow it before going to PEA and kind of locking that number, associating your deposit with that specific number? Could you go there and expand the deposit essentially?
No, in the oxides, not really. It's like I said, there's over 800 drill holes in it. So it's pretty well defined as far as an oxide resource. But again, when most of this drilling was done in the 80s and 90s, no one cared about sulfide. You didn't want the sulfide because you were looking for a heap leach resource. So the sulfide is where I think we can grow this resource significantly. If you look at Jarrett Canyon and Big Springs, those two, our whole trend, Gravel Spring or Dobie George, Big Springs, and Jarrett Canyon combined in that Carlin type system have about 12.5 million ounces between all three of them. I would say that 9 of that is in sulfide. So the sulfide resource is really what bulks up these deposits. Because, if you only have 100 meters or 150 meters of oxidation on the surface and these deposits continue down stratigraphy, then you have significant potential below them to continue to grow them. That is where I think we can grow the Dobie George resources into the sulfide zone.
Right. But that's not something for the imminent future, I don't suppose.
I think next year we'd like to tackle that because I think this PEA is going to come out and it's going to recommend, like you're just talking about, hey, go drill a couple holes in this oxide area to see if we can add a few ounces here, do this, do some geotechnical work. At that time, when it drills there, we'd add some more deeper drill holes into that sulfide zone.
What's the difference between doing that work now versus the PEA? And where I'm going from with this is really based on the Lassonde curve, right? You go into that dip of the Lassonde curve. Could that hurt the whole company, kind of mute the market response that comes from exploration at Gravel Creek because the market already deems you kind of in that PEA phase and they're like, oh, let them figure that out now.
That's a good question, and that's why we focused on Gravel Creek right now. We'll continue to focus on Gravel Creek as the results come in. But we can do this Dobie George stuff in the background. As I said before, what's the only reason we're not doing it, Antonio, really is capital. The capital markets for junior mining companies in the last 2 years have been tough. They've been dilutive. So we've made the focus on trying to focus the capital that we have on the highest return investment for our shareholders. Right now, high grade extension of Gravel Creek is the one. Dobie George, we can finance in the background because it doesn't take a lot of our effort. But when it comes to drilling, and we have to divide the exploration team up to do both, it's going to require more capital and a little bit less attention unless we expand the exploration team. So for what we have right now, we thought that Gravel Creek, with the high grades that we've defined immediately adjacent to that resource, is probably the best chance for increasing shareholder value.
That's fair. I think we've come full circle to kind of the first question, or the one of the first questions I asked you about the unanswered questions there. How do you tell the market about this, though? What's your marketing strategy behind going out there and telling the story? Again, I met your team, I suppose, at Beaver Creek earlier this year. What else are you doing?
We do a number of retail shows as well. We've done the Metals Investor Forum. We'll be at the PDAC. We tend not to expose ourselves maybe as much as some other companies do. When we're marketing, it's because we have something to say, Antonio. We're not going to be continually out there spending money marketing. We do have a marketing budget that is significant. I think of that $150,000 monthly that we spend on G&A, there's probably 35 to 40,000 no, not that much, maybe 20,000 that's going to marketing. So we try to get the story out there so that people are aware when news comes, they're prepared for it. And then when news hits the market, then we hit the marketing a little harder to make sure that people understand the context of the results that are coming out. And I think that's really important. Is it's easy to put out results, but like the questions you've asked, Antonio, are very focused on what is the context? What does it mean? Because at the end of the day, we're not here to drill holes and show splashy results if we can't connect the dots and we can't take it further up the curve to ultimately take this to development. That's our number one goal. That's what we're focused on. So we tend to do our marketing focused on making sure people understand what we're doing, and then we hit it harder when we actually put results out so that people understand the context that what we said we were going to do, we've done, and this is what it means. For good or bad. I mean, we need to be very transparent with everybody on what do results mean.
So it's essentially on the back of these results that you're expecting. When, by the way, do you think the rest of the assays are going to come from Gravel Creek?
It'll be until they'll be coming out probably in the next week to 2 weeks until the end of November. We're seeing good turnarounds in the labs right now of 3 to 4 weeks. So our last hole will probably go into the lab in early November. And then, 3 weeks later, the end of November by the time we see that.
So you do expect to be ramping up marketing toward the end of the year, or is that because you're telling me if you have good news, then you go out there.
December's usually a tough month to do any marketing.
Exactly.
But usually what we do is into November. I'm going to be at the Zurich, the Precious Metal Summit in Zurich, to kind of give context to the results that we've got so far, tell people about how we're going to carry that forward. We'll be at the show in New Orleans at the end of November, towards the middle of November with Brian Lundeen. We do that one every year for the retail space. And then probably hit it harder in January. Minerals Investors Forum, the VRIC in Vancouver, the Cordillon Roundup, the PDAC. There's a lot that really kicks off in mid-January to kind of the start of March. That's kind of when we do a lot of our marketing because, again, our seasonality of exploration work, we've got all our results in by the end of the year. We can give them context in the start of the year and go into the financing for next year's program in, between February and March kind of timeframe.
So November is going to be busy for you because if you're going to Zurich for the Precious Metal Summit, that's I think that's in 2 weeks from now or something like that. So it's the 10th and the 11th, and then the New Orleans conference, which I was also trying to go to, is at the end of November, like 10 days after that. So it's kind of back to back marketing. Yep. So it's results, 2 conferences on the back of that, and then going into the new year, then the other ones. So it's a busy time.
And Antonio, as you noticed at Beaver Creek, I do try and get our whole team to these events because I think it's important that everybody understand that it's just not about me. There's depth in this organization, from the CFO level to the exploration level, all the way to IR, and I can highlight some of those if you want. But I think if everybody can convey the message confidently and truthfully to our shareholders at every level in the company, I think that just makes it a stronger message. So, I hope that shareholders and our stakeholders get to see more of the people that work for our company, because I really do think it demonstrates the expertise that we have in this organization.
That is a good point to end the conversation on, I think. Thank you so much, Darcy, for sitting down with me today. What am I forgetting to ask you? What did you come here hoping to talk about that I'm failing to bring up?
No, Antonio, I think you've covered it. Those were very good questions. I like questions that challenge you, because it gives your listeners or your readers the opportunity to understand the thought process that goes into them, right? It's not just a scripted answer. So, I think we're going to stay focused on that high-grade discovery. If that works out, it's an immediate resource expansion to an existing resource. The only thing I would add, Antonio, is we talked about the Carlin-type system at Dobie George. The Gravel Creek system is, I think, related and comparable to two of the highest grade, most productive epithermal deposits in Nevada and northeastern Nevada, which were Midas and Sleeper. Our mineralization was dated by the United States Geological Survey in February. It's identical age as Midas and Sleeper, 15.4 million years old. It's the same rocks, the same style of mineralization, the same mineralogy. So I think when you look at the prospectivity, as you said earlier, of a target, has the team done it before? Have the drill results indicated that it is expandable? But I think the third element there is there analogs to it in the neighborhood? Because these things, especially epithermal deposits, porphyry deposits, they occur in clusters. They occur in similar geological environments and areas. And I think if you look at where we are in this northern Nevada epithermal belt, there's a number of indications at Midas, at Sleeper, Delamar. I know Delamar's now is a lower grade sulfide heap leach deposit, but in its past, it was a very high grade underground epithermal deposit. Same age as Gravel Creek. So I think we've discovered a very significant Miocene-aged epithermal deposit that has a lot of analogs in this part of Nevada, but not only analogs, but very successful analogs that were producing gold at very low cash cost, because they were above 1 ounce per ton production.
Thank you so much for doing this. Maybe next time we can pick it up there and talk about that comparison that you're making, because it is an interesting comparison. If it works out that way, it would be even more interesting. But again, thank you so much for investing your time with me today.
My pleasure, Antonio. Thank you.